for joining us here. Ladies and gentlemen, distinguished guests, and of course, insurance industry leaders. My name is Zenia Fernandez, and it is my absolute pleasure to welcome you all to the third edition. Yes, it is edition number 3 of Outlook Money Insurance Summit, and that is your cue for a round of applause. Come on. Now, I'll tell you why I asked you to applaud. One, of course, because I, made an opening. But secondly, because we're in the third edition, but this time is really the first time that we are conducting this summit physically, on ground. After having 2 very successful virtual editions, here we are. And you'll agree with me that the experience of being together in one room, face to face, the energy that creates is something different, right? So can we have one more bigger round of applause for the fact that we are all here in this room? So this year's theme, as all of you would know, since you've seen the agenda already, is crystal ball gazing, new age disruptors in the insurance industry. And while we all know what this really means, I would like to throw light on the fact that we've designed today and all the conversations that are going to take place around discussing what are the latest trends that we can look at for 2023. But more importantly, what is the kind of technology that is shaping the future of this industry? Technology, as we all know, is expected to, already does, and will continue to play a very, very pivotal role in shaping the insurance industry, be it AL, ML, or the metaverse. We're already expecting it to transform the way we do business forever. So the key to having all of these conversations is to discuss, is to debate, is to figure out how all of this is going to affect and change the landscape of our industry and our community. So without any further ado, let's begin with these conversations. But to kick off today by setting the context and telling us what can we expect, please join me in welcoming on stage editor Outlook Money, Nidhi Sinha. Welcome, Nidhi.
Thank you, Zinia, for that lovely introduction. Good morning, everyone, and a warm welcome to the third edition of the Outlook Money Insurance Summit. I'm delighted to see so many of you here, including top industry leaders from the life, non-life industry, technology platform providers, value creators, distributors, the agent community, and customers, of course. The summit promises to be an exciting and informative event as we discuss and brainstorm the impact of new age disruptors on the insurance industry. This is critical technology that we need to discuss and the innovations around it and how it can impact the customer and distributor profiles going forward. But before we delve more into that, I would like to take a moment to celebrate a significant milestone for Outlook Money. The year 2023 also marks the 25th anniversary of the magazine. When we launched in 1998, it was a niche genre of journalism, and we are proud to have served our readers for a quarter of a century now. Over the years, the insurance industry, of course, and the personal finance landscape has seen significant changes, but what has remained constant is our accurate, insightful journalism and balanced and practical advice for our readers. Now I come back to discussing the topic today. The insurance industry, of course, has come a long way from the year 2000 when the insurance regulator was constituted and opened up the market for private players. Now we live in a world where technology kind of defines how we live, work, and interact. And it has the potential to change how products are designed, how policies are underwritten, how frauds are detected, and so much more, including improving customer experience. As we navigate these changes, of course, it is crucial to remember that the customer is at the heart of everything that we do. In fact, the customer is also a new age disruptor because he or she is much more savvy and more aware and is demanding much more from the insurance players now. We hope that this forum will provide a platform for meaningful discussions today, and thank you all for joining us today and for your continued support for Outlook Money. I hope the summit will be informative and thought-provoking. Thank you.
Thank you so much, Nidhi. Thank you for setting the context. We're going to open with our first power panel of the summit today. But before that, congratulations Outlook Money and the entire team on completing 25 glorious years. That is phenomenal. Okay, I also want to remind you that all of the dialogue that's going to happen here on this stage, we would love to take it outside the room too, to the rest of our community. So I'm going to invite all of you that while we're listening to our speakers, if you could also join us on the social media conversation. And when you do that, you can use hashtag Outlook Money Insurance Summit so that our entire community can find all of the data under one hashtag. All right? So it's hashtag Outlook Money Insurance Summit. You can share your thoughts, your opinions, anecdotes, your key takeaways, even videos and moments from the summit. All right, let's talk about our first power panel here. We have distinguished personalities from the world of insurance who will be joining us here on the stage discussing the topic New Age Disruptors. The stage is all set, and so am I to introduce our panelists and Nidhi, who will be moderating this discussion. Our esteemed panelists, first we have Mr. Kamlesh Rao, the Managing Director and CEO of Aditya Birla Sun Life Insurance, who brings with him a wealth of experience and knowledge in the insurance industry. Next we have Mr. Mahesh Kumar Sharma, the Managing Director and CEO of SBI Life Insurance Company Limited. Yes, sir, please join me on stage as I invite you. He has been a driving force behind the company's success in recent years. Joining them is Mr. N.S. Kannan, the CEO of ICICI Prudential Life Insurance Company Limited, who, as we all know, has been instrumental in shaping the future of the insurance industry. And finally, we have Ms. Vibha Padalkar, the Managing Director and CEO of HDFC Life Insurance, who has been recognized as one of the most influential women leaders in the country. And moderating this discussion, of course, is Ms. Nidhi Sinha, who, as we all know, is an accomplished journalist with over 2 decades of experience in finance and business. Okay, fantastic. Nidhi, over to you.
Thank you again, Zinia. I welcome my esteemed panelists for taking up the valuable time to attend the Outlook Money Insurance Summit, the 3rd edition. As we all know, COVID-19 pandemic kind of it jolted us out of a comfortable place, and the insurance industry had to kind of re-embrace digitalization and reinvent itself in many ways. So it changed the way the products are sold and received by new age customers, and like I was saying earlier, one of the disruptors that we see today are the customers themselves, because their demand is much more than ever before. So apart from that, of course, there is AI, machine learning, and metaverse, other emerging technologies that can, that can kind of recalibrate the future of the insurance industry. So now we have seen many innovations in the general insurance industry, of course, but not so much in life insurance, I would say. So what is the way forward is something that we'll discuss today, and we are of course fortunate enough to have CEOs from some top life insurers in the country who will share their opinions with us. So starting with you, Vibha, the only woman panelist today on this session. Vibha, the insurance landscape has changed a lot in the past few years, like I said, during COVID. So how is it readying itself to tackle other disruptors, other emerging technologies that are coming up in the future?
Thank you, Nidhi. And congratulations on Outlook Money completing its 25 years. Time really flies.
Thank you.
And all of you have gone from strength to strength, so congratulations. And all of you have been great supporters of the life insurance industry over the many decades, so thanks for that as well. couple of things, and I just wanted to, and all my co-panelists will agree to your, or disagreeing with your point that life insurance has not evolved as much as general insurance.
Absolutely, I want to talk.
Absolutely, and let's dispel that myth many times over today on this panel, and this question never gets asked again. And that is really in life insurance today, there's nothing like new age technology or new age life insurers and old age life insurers, because when you keep customer at the center of whatever you do, customers are evolving, and we would have customers who want to buy in the traditional way. We would have not just jumping to the Gen Z, but really anyone else depending on the digital age of the customer, and not necessarily just the age, human age of the customer. And we need to be where the customer is. Customers' expectations, even more so after the pandemic, are that the way they buy their grocery is how they are expecting to buy anything else, be it insurance or any other financial services product. And so it's really up to us to make technology core of what we do as against just a gratuitous. And so how we are designing products, so what we sell and how we sell becomes important as against only what we sell. And by that I mean not just the design of the product, but also the entire ecosystem as well as the journey, both in terms of new business as well as onboarding, and lastly also in terms of what do we do with all the data. Why do we need to do anything with data? Because to make it very easy for the customer, all the complexity is behind us, with us. Exactly like how we use technology, a lot of complexity behind the scenes, but the customer doesn't need to be saddled with it. And data allows us to do that. And as we join hands together both as a sector as well as larger financial services, and that's exactly what the government is also looking at, use of data so that you give both seamless onboarding, seamless servicing, and also the third leg in terms of risk management. So how do we keep out unwanted behavior patterns in the life insurance so that the honest customer is not subsidizing the customer who is not honest. So all of this is intrinsic to how the business models have changed. I'll give you a couple of data points. Today, close to 96% of our renewals, so 96-97% are entirely digital. Or for example, we have virtual avatars, and all of us do virtual avatars in terms of servicing the customer. Or when you look at digital nudges based on data, or use of AI, ML, use of RPA in terms of how are you handling customer queries. And most of the regular queries are not handled by humans anymore. How are you using AI, ML for core underwriting, at least for the most standard cases of underwriting which don't require human intervention at all. So this is now embedded into everything that we do in life insurance today.
Right, of course, like you said, the chatbots and everything, all of that has become a reality. But what I also mean to say, and Kanan, I'll ask you that customers are also have a little more expectation in terms of not just interactions, but even the kind of products or customizations that they may want to look forward to, especially when it comes to life insurance. So what are the plans to deal with those kind of demands or expectations?
Thank you, Nidhi, for first of all having me here, and good morning to all of you. And let me join Vibha in congratulating Outlook Money. 25 years is not a easy thing to be surviving and thriving in competitive industry like yours or ours. It's a big achievement, and congratulations and many more happy returns of the day. So let me take your question. You said that customer expectations are changing a little bit. I think that's an understatement. The customer expectations have changed hugely. Why I say that is, if you look at it from a customer lens, first of all, the need for insurance has become much more today compared to what it was earlier. Partly, one could say, is driven by the volatility in the markets as well as the pandemic-related uncertainty in life in general. So that is one area where I feel that the need and awareness is much more than what it was before, can always become bigger and better. The second is that customers are also very choosy and careful about what they are buying, what kind of, what is being promised by the industry across every field, and then be aware about what they are buying and what they are not buying. I think the awareness in terms of the category itself is much more than before. Third, I think general ecosystem in the country, if you look at the digital and the technology ecosystem has evolved so much. Example, the payment space, if you look at. So naturally, those expectations get carried to any category you buy.
Right.
Biba talked about how we buy other categories. Same thing is happening here also. And you have overlay that with the general awareness about the pricing. You have these aggregators today. If you just do a Google search, you know the term price of all the 4 companies sitting here. So all in all, huge expectations from the customers on how we want to behave in terms of product design, sales, everything. So that is a fact. So your question is that how do we handle as an industry in this kind of situation? I would say 2 things. One, I think we'll have to constantly internally disrupt ourselves. The traditional way of doing things, be it policy buying or servicing or claims, I think we'll have to keep questioning it ourselves. And secondly is that external collaboration. I would just put these 2 as a key. I mean, I'm sure there are much more, but these 2 things as key. So let me elaborate on the first one. Internal means that, get your data scientist in play. Look at what is the data available around you. In customer data, the customer doesn't have to give any more. They have to just give a consent. All the customer data is somewhere in the ecosystem, digital ecosystem and the digital stack of the government. Right. So if you just take a consent and then keep the data flowing into the company and analyze it. For example, the credit bureau data. I have an analogy. If you have a Digi Yatra, where you can walk into an airport without giving anything there, seeing your face, you get into the security directly. Why can't we do that in policies, life policy? Because that ecosystem talks to the Aadhaar database, talks to the airline, talks to the airport, and face becomes a common sort of identifier. And then it's so easy to live for the customer. So same thing is available for life insurance. Get the customer data, link it with EC/KYC, link it with the Aadhaar, link it with credit bureau, and then potentially the health database of the country. And we should be able to make the ease of buying a reality in life insurance through these kind of means. That is very important from the customer perspective. So this is what I would say is the key thing in terms of what we want to achieve.
And the customers seem to be ready for that kind
of course, and
data sharing.
In reality, I'm not saying it in a negative way. They are spoiled for choice today. Plus, in terms of ease of doing things through a QR code payment space, look at the way it has evolved. So they are exposed to that. So if we keep thinking that this is the way traditionally I've been running the business, that's not going to work. And to a large extent, we also in the near future will continue to be an intermediated industry. I don't think we are going to become a 100% direct industry. Predominantly, last mile will be covered by our distributors. So it's important for our distributors also to understand the customer expectations and technologically enable the way they sell their service so that they also look smart in front of the customers whose expectations are growing. So I think these are some of the areas where, like Viva said, life insurance companies have really done a lot of innovation. Maybe we don't talk about it too much. We would rather not talk about it too much and deliver what is required for the customers. But you should also accept that unlike general insurance industry, insurance buying and selling is a bit more involved buying and selling. When a person buys a 30-year, 40-year product, you cannot walk out of it in 1 or 2 years. Whereas in other categories, you can actually go for a renewal and go to a different service provider at the time of renewal. Right. That's not to be here. So maybe people want to understand, they want to understand that when I'm not there, will this company survive to pay my family? Then it becomes a little more involved selling. So kind of a on-the-fly innovation you may not be seeing it, but beyond that, given the category constraints, innovation has been enormous, both on the product side, as Vibha said, and also on the process side. So these are some of the aspects I want to make in the context of the customer expectation.
Okay, right.
And external, just last point, I said second category, external collaboration. I think everything cannot be done internally. There are so many ecosystem players in technology. Collaboration is the way to go. And collaboration comes naturally to this industry because in the distribution side, we have been collaborating with our distributors. Same thing we'll have to carry to the digital side in terms of startups, in terms of some of the new tools and techniques which are there. Just collaborate with them. And if the government goes and gives us an ability to form subsidiaries or getting into those kind of value-added services, which we hope will happen in the near future, that opens up a different opportunity for us in terms of integrating with the skin in the game in terms of doing this innovation.
So do you see any such collaborations going forward, like in the immediate future?
Already happening a lot in terms of a partnership But I think a collaboration with skin in the game can happen in terms of owning those companies or making them subsidiaries and integrating it seamlessly to our own operations through possibly the proposed amendment in the insurance bill or any other regulatory measures and the government measures which are being talked about. So it's exciting time as we move forward. Thank you.
So Karan, of course, talked about internal disruptions also. So taking off from that, Mahesh, does the insurance industry also need to look at, say, redesigning products itself and the whole distribution ecosystem?
Yeah, so congratulations on completing 25 years and also thank you for having me on the panel. See, the question is that, do we need to change products? We have been changing products, and if you look at the innovations that have come in the product space, you will find that a huge amount of innovation has come in products. But then till now, most of the regulations had been straight-jacketed. They were, very aligned to traditional way of thinking. Now we see that the regulator has, got so many new ideas coming up and so many new regulations. I think Kandan is also on the committee that is looking at the easing of the regulations, and then you're going to come down from 79 regulations to 10. So I mean, like when you look at that, you also see that you're going from a prescriptive regime to a more principles-based regime. So once you do that, then creativity can kick in. Earlier, many of the things, many innovations were not possible because everything was prescriptive. So you had a very similar kind of products. Even within that, you find huge amount of innovation that has been brought in, and that is the way to go. Going forward, I think we'll find more and more innovative products. The other thing is, as you collaborate with the new age companies, the disruptors, so-called disruptors, as technology enables us to give more customization, more analyzed data, and use more analyzed data, as a regulation will allow us to pull and use data from various sources, and as these sources become available, I mean, it is a direction, it is a step in the direction of customizing products, making products more and more suited to each individual, and pitching these products to them. So for example, today, if you were to know what kind of customer is buying what kind of product and what is the feature that is clicking with him, with the data that you have available with us and with our distribution partners, but also the kind of data that is available in terms of KYC, the income data that is available. If you could fetch all that data, and you have this account aggregator model coming in, a lot of financial data is now available. With all that, you will be able to pitch these customized products to each and every individual. So that will be the key driver going forward.
So are there any examples of such products? Because the regulator has also kind of cleared immediate filing and use and file, that kind of regulation. So is there something in mind as something that our audience might be interested in?
Yes, so what we do right now is we analyze the data that we already have and the data that we have access to. And then there is a lot of data out there, like for example, Google does, or various platforms, they do the analysis in an anonymous manner. They provide you with the information of what, and the pitching is happening that way. There is a lot of pitching that is happening on social media, on the web. All those things are already happening. So that customization to that extent is already happening. But then what we are talking about is that we would be able to then design products and specifically target people who would then be who would be needing those products, and who would probably feel the need the moment they are pitched these products. So it will be a very a higher level of customization that will be available.
Okay. So pitching is something that is coming out of the conversation on how products are sold. So Kamlesh, the next question is to you. So in this scenario, the distribution community or the way the distribution channels maybe have to be rethought about how they can approach customers with new strategies, with new products, because already there's so much confusion. There is a lot of issues that people have in buying products. So what are the things that can be done on that front, on the distribution front?
Good morning, everybody, and thank you for having us here. I've been looking at the average age of this panel. It's nice to be on a new age disruptors panel for sure. And congratulations for your 25 years. You started by saying, I don't know, and Viva immediately took that personally, and I'm happy she did that. Because in the 2 years, even in COVID time when the world was shut, I don't think the 15,000 crores worth of claims that were paid and not one issue that you would have seen in the marketplace is an example of whether we've really come of age or not come of age. And I think if you divide the product thing and the process thing, I think the processing of the life insurance industry is seriously new age today. Whether it's be the underwriting, whether it be the way the claims is processed, whether it's the way the selling happens. Because when the world was shut, insurance business still grew at 10 to 15% year on year for the last 2 years kind of time frame. The question on products that you asked, Mahesh, I just want to pick. There are products today which compete with various financial services. I know for a fact that Vibha has a product which competes with the mutual fund FFPs. I have a product which competes with fixed deposits of the bank, and they do reasonably well. Banks distribute those fixed deposits for us. I think what Karan is saying, maybe we don't scream and shout as much as we need to. Maybe we'll take that and try and do it through you in this forum and maybe a little more. But I think the distribution space, if you look at what's happening in the last 2 or 3 years' time, banks have become very large distributors, apart from, of course, the agency that Karan spoke about. We've done a lot to make sure the process becomes quicker and faster. We no longer, there's a myth that insurance is sold and not bought. You look at the bank distribution today, they have data of their customers. We have very good data models which actually tell you if Nidhi is supposed to be sold a product, which is the product I should sell to her. So I'm not selling to you, I'm telling you which are the 2 products ideally that you should buy. And the good is meant for you, and all of us do that. It today is about anywhere between 25% to 33% of our business. That portfolio for us has had 0 complaints in the last 2.5 years kind of time frame. So data and analytics has reached a very different scale, and that's why the distributors today go to a customer knowing what is it that I should present to him rather than sitting with him and doing a need analysis all over again. So I think data has reached a very different stage. What we need to graduate to is the point that Karan was making, to say, will I get sold when you're buying food on Swiggy or Zomato? Or will I get bought when you buy tickets for Book My Show? And I think that's the space that we want to start thinking about. Hopefully we should be the disruptor, not get disrupted by anybody else. But you got to be careful about the fact that when we offer some of these products, bulk of the products that we sell are products which the customer pays for 10-15 years and gets the benefit over the next 30-40. So how much of simplification will you be able to build in, I think is important. I think the health industry is doing a great job in that area. Today you get health insurance if you're on a ride with Ola, which is possible. But can I sell life with that ride on Ola is a function of the economics of the ride that he's buying, and therefore it needs to fit in.
Right, that's why the question was that, how do you plan to innovate in life? Because, in a way, of course, general insurance makes it easier.
Yeah, but you're buying in general that 1 year product. You pay for 1 year. I mean, if I start selling a life cover for 1 year, I don't know who in this room will buy because you want to make sure you're buying today and younger for life cover till you are 80. And if I have to give you that product, then I don't know that I can build into the ride in the Ola or no. We will make an attempt, but I'm saying it's a function of what will get bought. And that's the point that Karan was making. I mean, you get savings products today that we offer which are, frankly, tax adjusted better than some of the returns you may get on mutual fund debt funds. But you have to make sure you understand what you are doing. You pay me for 10 years time and I will guarantee you the income for the next 40-50 years. I think we'll have to work harder to simplify. So I'm not saying we don't have that in our mindset, but I'm only saying to what extent will that happen is a function of what we are selling and the execution and delivery of that on the platforms that you're talking about.
How is the persistency right now, if I may ask? Because we are talking about these long commitments in life insurance.
Persistency, for all of us, if you look at the life insurance industry, is just getting better and better. You will find bulk of the guys in the top 10 to be above 80-85% on 13-month persistency. Like we were mentioned, the great part is a large amount of this money is coming digitally. Close to 100% of your business today is sold on auto pay. All this was not like this about 3 years back. If you get business on auto pay today, then you can be sure that 95% of these guys will pay again their future premiums and so on and so forth. So my sense is where you are today, if you look at where you were 3 years back, there is a remarkable change, and my sense is that it will only get better with time.
Sure. So coming back to you, Vibha, we've been talking about a lot of these things where interactions are digitalized and customers are approached directly. But life insurance is also a lot about this balance between human touch and technology, because it is, traditionally the agents have been convincing people about or explaining the concepts. So how does that balance happen in this changing scenario?
See, I am in the camp that insurance is equally an emotional pie and not only a cerebral pie.
Right.
It's made out to be about term rates and IRRs. Ultimately, people buy insurance because one is afraid of something and want to transfer some of the risk so that you can sleep peacefully at night. Right? And that's why our focus on mortality, morbidity, longevity kind of concepts, rather than only managing money. So if that is the hypothesis, then one equally has to look at how does one increase the awareness. That is one, which is what any kind of awareness drives that we do, whether it's through advertising, whether it is through our partners and so on. And the second is brand consideration and insurance consideration, both individually and as a sector. And you'll see more in the new financial year, us collectively doing things as a sector as well. A little bit late to the game, admittedly, but also some of it to be a little bit easier on us was COVID and so on, so you'll see some of that. So that is that part. So it's a combination of how do you nudge people, because the products are take a little bit more time, like what Kamlesh was saying, because of the nature of the product. But the need for it doesn't go away. So you have to increase that awareness. So that's at the top of the funnel. So you need to increase the funnel, and then how it goes through and travels through the funnel is what we all talked about ease of onboarding, using data analytics, and so on. At the same time, we have to be cognizant that risks are not static, because again it goes back to my hypothesis or our hypothesis that it is an emotional buy, and so this is very closely correlated with socio-economic changes, demographic changes, and so on. Earlier, insurance used to be in the form of joint family, at least away from the top 10 cities. Insurance was in the form of HUF, it was a proxy. Insurance was in the form of physical assets, gold and real estate being very favored long-term assets in the event of any catastrophe for the family. Now, I think all of us in this panel here are unlikely to probably live permanently with our kids, right? That has happened in one generation. We want to live close by, hopefully, but even that might not happen, which means that, and also juxtaposed with that, it's a good problem to have that people are now outliving their retirement age by at least 25 years and growing. Inflation is not going away in a hurry. So these are all demographic and macroeconomic changes than just about insurance. Why am I giving a long answer? Because all of this is our job to nudge people to say, have you thought about this? Have you thought about that? As against, I have a product and I'm going to push you through my distribution. We do that too, but I think the how do you convert slowly from being a push to a pull, at least for certain types. Term is one, retirement on the other, spectrum is another. So those sorts of things. Earlier kids used to be one. So these are some of the aspects which will ensure that how we design products and how we design journeys and how we give that experience to the customer is also intertwined to your point about how do people think about various aspects which nudge customers into it. So as insurers, we do spend a lot of our mind share on some of these other ecosystem things of how are Indians thinking about it, both on the top end of the funnel and equally, if not more important, on the missing middle, of tier 2, 3 towns. How is that happening? In a similar, because when you look at the number of high-end cars in the Aurangabad, Nashik, Tirupur, and so on, this is staggering numbers of wealth that is domestic driven, and hence the need also. So all of those things, and also the regulators looking at how do we take it to the slightly lower end in terms of Bima Vistar and Bima, various other initiatives. So it's really all of that which will get to the end customer by increasing the top of the funnel.
Right. So distribution network is something that I guess the industry has to work for if we are to service the country, like you mentioned, Vibha. So Mahesh, how is that balance, kind of being thought about between customer interest, like we talked about there, the whole emotional convincing and everything, and plus the distributor requirements in this changing scenario, and the need to expand?
See the customer, you have to keep the customer at the center, because any product that will, any product that the customer needs is what will drive the industry. So if you provide the things that the customer needs, maybe the needs they don't know about, but you have to make them aware of that need. So one of the things about making people aware, having a campaign, industry-wide campaign, or also from the side of the companies that we also work on trying to increase awareness, and also our agents and the distribution, when they reach out to the customer, they this is what they pitch. They show them what their need is, and at this point of time, what kind of insurance they require, and then that is how we sell the product. So that customer has to be kept in the center. The distribution is very important because it's a very difficult product to sell. I've said this before also, but you are talking about death. In India, nobody wants to talk about that. We just say something like, if something happens or something untoward happens. Basically, it is very simple. If the customer is dead, what happens to his family? So that conversation is a very difficult conversation. These are the people, the distribution is these are the people who go and talk to people about this. So the distributor is a very important part of this.
Absolutely, and even in convincing the importance of
so that is the answer to your question on general insurance and life insurance. The difference is that general insurance is a very much easier thing to talk about when you are talking about a mobile phone cover breaking or something. So when you are buying say bananas and you want to say that okay, you can buy a mobile phone cover on that for say whatever rupees, it's a small decision to take. Whereas when you are talking about life insurance, it's a very major decision. There are many aspects to it that people have to think about. And here the distributor is actually helping the customer not only understand his needs, but also in selecting the products. So it's not just that the distributor is going and selling a product. The distributor also functions, in the on the other side of giving feedback to the company. So a lot of the feedback that we get where we introduce innovations to products or we introduce new products comes from the distribution, where they talk to the people and understand what is happening. So keeping the distributor happy is very important, and he has to be rewarded. And out here, we have covered not even 18% of the protection requirement of the country. So to cover the remaining 82% is going to take a lot of time and effort, and the distribution is very critical to that. And therefore, we need to have a technologically enable the distribution. We also need to offer the solutions that people want. But it's not, it's a totally different thing. You buy bananas, it doesn't come out, I buy bananas, I call, and 20 minutes the bananas are delivered at my home. If it is not good, I can just dump the bananas. It's not a big amount that I need to worry about. But if I buy insurance like that, life insurance, it may be that after 30 years my family doesn't get any protection. So that is what I wanted in the first place. I can't return it. The experience is totally different. Technology will enable us to do the analysis, who needs what, how do we reach out to them. So now I have an agent in Kerala in COVID who started this idea of customer relations programs as a webinar. So she used to organize a webinar for 10 customers, 15 customers, call them all, tell them that I'm going to be on this platform, and then can you join me on that? And then she used to explain the product. And it got on very well, and we were able to continue to do that. So technology will help us in that. The distribution is going to be similar. What we have seen in very developed countries in Europe, what we have seen in the East also, Japan, China, is that general insurance, there is a lot of innovation which has happened out there also, click and buy kind of thing. But here, the click and buy is going to be more delayed, and it's going to be specific products. So today we have sold, 7 lakh people we have covered in this year on the Euro platform in SBI by 3 clicks. So they just go to the platform and have 3 clicks and they buy life insurance. But that is a term policy for a certain amount, and then you have to, it's an annual payment that you have to make. But for the remaining part of the industry, all the products are very complex, and I think we still need a lot of the distribution to do that.
Right, so more nuance and more complexity in life insurance products, of course, and that is perhaps one of the reasons why the distribution needs to be more sensitive than perhaps it is now. Maybe it is already moving in that direction. But coming to the needs and requirements of people, right now we are also in the middle of an economic turmoil. So do you think, Kamlesh, life insurance policies can provide some kind of stability also in these times? Because there are some traditional products that, of course, the mortality cost always remains a matter of debate when you look at life insurance as an investment. What are your views on that?
This issue on costs has been a big discussion, and I just want to break that myth because I've been on the other side distributing non-insurance products too. I think you got to look at a time frame. It's like saying you think putting money in a mutual fund is cheaper than putting money in a unit fund of life insurance. But I think the time frame is important. If you are looking at a time frame of 8-9 years, the cost will become even better. And I can tell you, not many people may not like it, but on a 10-year basis, fund return performance of insurance industry will perhaps beat any mutual fund manager on any statistics. So I think today life insurance, apart from protection, and there is data to say for every 100 rupees that the entire industry pays every year, about 4.5 rupees is paid for death, and the balance 95.5 rupees is actually paid on maturity. So much so today that wealth management firms and wealth management institutes of banks today sell a lot of life insurance because they have become now an asset class in the financial planning of an individual. So to me, I am not saying any product is right or wrong, but we have reached a stage where we think on products like what we offer guaranteed returns for say 30 years, 40 years is an important asset class for any individual, whether it be mass affluent, or even the HNI, and we've reached that state as today is about 1/3 of the business that we do. And that increasingly, if you are looking at various asset classes like fixed deposits, equities, we've reached a stage where not just protection, but some of the savings products that we do are an important part of the asset class of all individuals.
So as we come to the end of the discussion almost, Kanan, like Kamlesh was also mentioning, and return versus protection is always a debate in life insurance, and I think it's here to stay for some time. But do you think, coming back to the tech interventions that we've been talking about, will it make any difference to that, or can it solve that debate or address that debate in any way?
Yeah, thanks for asking this question because I have slightly a different point of view on this debate of return versus protection and so on. And you didn't ask me that, but generally when I see in the market there's a lot of comparison between what is life insurance versus fixed deposits versus mutual funds.
Right.
Frankly, I find this comparison quite uninformed, and if I may say so, actually specious. Why I say that is, we just step back and look at our industry, what are we providing to the customer? We are providing a long-term financial security to the families, and I would add a caveat to say that whether the customer exists or not. This is a very important statement of what we provide in the context of what is happening in the financial services space. I don't think any other category can provide this. Then, how do we deliver this to the customer? There are two vehicles through which this gets carried through. One is a savings platform, the other is a protection platform. Savings platform, what is the fundamental thing about the savings platform is that you have a particular goal. The customer has a goal, maybe 30 years, 20 years down the line, and it has to be a goal-based savings. So the customer starts saving today, and if the customer, she or he doesn't exist during this period, still the goal is achieved by the family. So every single product in the savings space in the life insurance industry is having a cover of long-term protection. I think this is missed out in even the policy debates or any of the other debates around tax, various things. This is completely missed out. So once we define it this way, then what is the savings platform achieving? Then the savings itself, the needs could be different across the categories of customers. Some people may say that I don't mind taking the volatility of the markets, go to ULIP. Some people may say I want a higher guaranteed return, go to non-linked guaranteed products, or I want to have a bit of both, some downside protection, a little bit of thing, then go to the participating product. So once we define it this way, there is no debate really. And then you go to the right side, which is the protection, and protection is also defined in a different way. There you say that I am not yet prepared for a goal-based savings because I don't think I have so much of disposable income, but I want to protect the downside for my family by taking a term policy, because that is the cheapest way you can protect your family for certain basic needs without having to spend too much of money. And the younger you are, better, because the mortality charges are, there's no need for comparison because they're very insignificant in a country like ours. Or you say, I've taken a housing loan, and if I die, I don't want the family to be saddled with the loan, they want to take the house. So you do the liability protection. So once we do this, so I think the category is very clear. This is where we operate as a life insurance industry.
But that's primarily term insurance. Of course, that is the simplest form. When I also talk about this debate about returns versus protection.
That's what I'm saying. So don't go to the debate at all, because you're saying I am giving the long-term financial security for the family, whether the breadwinner exists or not during this time. When you do that, then you come to the savings as a platform. Every savings product has got a multiple of your annual premium as a protection. So this to me is the key. Then there is no debate. How does it matter return? How does it matter? Yes, if somebody wants a return to say that, if I don't die, I want to get a large guaranteed income, that's available. Or I don't mind to take the volatility of ULIP, the financial market, that's also available. In between, if something happens to me, the outcome is given to the family. It cannot happen in any other category. Once you do that, there is no debate at all to me. You decide whether you want money back, or me. It's better to use myself as an example. If I die, then I want the family to get certain money. It is available. Which product gives you that thing? The goal of the family is completely secure. No other product gives this. So then, if you want return, you go to such a product. If you don't want any return, go to the term product. Then there is no debate thereafter. So I think this, again, I would say, like Kamlesh quoted me, this, I think as an industry also we need to do a lot in terms of propagating this concept. Then there is no fight with any other category in the country. Then you asked a question of how tech can come into this. To me, I say that again, the customer data is available. The customer life stages are well known. When that is well known, between these two categories, goal-based savings, what to sell at what stage of the life customer, tech can play a huge role. Kamlesh talked about the banks. Banks have a wealth of data. If you find that a new addition to the family in terms of a new arrival, then you can intervene at that time, the responsibility increases, you can sell a term product. Or if there is a loan being taken, along with the loan you can say the liability protection product. Or if somebody says that, okay, I have enough disposable wealth, how can I keep it in the long-term savings, keeping the vagaries of the market outside, then you can buy a savings. So the tech can come in really to customize what is required at what stage of the customer's life. I think there can play a big role. I think increasingly companies are doing it. I'm not saying companies are not doing it. Tech can play even bigger role in terms of triangulating the data and sell the right product at the right time to the right customer. That is where tech can play a role in this space. Sorry, Mr. Mahesh wanted to say something.
I was just emphasizing what Kandu was saying. When you are building up your corpus for your family, if you are in any other asset class, if you die, the accumulation stops there. You get whatever you have accumulated. Here you get a sum assured, which is a multiple. So a ULIP policy a person takes, I take a unit policy and I die within 1 year of taking that, I get 10 times, my family gets 10 times that amount, and this no other asset class does. So that is what I was trying to emphasize.
Of course, I would agree that the life insurance as an asset class is something that is absolutely necessary for every individual. But protection, of course, is a very, very important thing, and term insurance does that. But anyway, coming to the end of this discussion, I think we have had a lot of takeaways today. Innovation and data explosion can play a major role in how the insurance industry looks forward. And thank you so much to our panelists for having this discussion today and sharing your knowledgeable opinions. Thanks a lot.
Thank you to our power panel. And Nidhi, thank you on behalf of all of us for asking some very pertinent questions. I think one thing that came clearly out of this conversation is that reinvention continues in 2023 as the industry aims to ensure ongoing relevancy, and we're all hyper-focused on modernization, on digital transformation and innovation to boost customer centricity. Before we move ahead with the event, we would like to express our gratitude to our esteemed sponsors, without whom this event would not have been possible. LIC of India, Bajaj Allianz General Insurance, SBI Life Insurance Company Limited, HDFC Life Insurance Company Limited, HDFC Ergo General Insurance Company Limited, New India Assurance, Graditim, and our outreach partners, ABAI, IBAI, and IAI. Thank you very much. Yes, I think we should definitely take a group photograph of the power panel on stage before you go on to do very important things of the day. Nidhi? Yes, please do. All right, we've got our best shot. Thank you very much. And now, ladies and gentlemen, it gives me immense pleasure to welcome you to our masterclass cum presentation on Agents of Change. Our speaker is a renowned management leader and professional from the banking and financial services industry. He has worked in India, Japan, and the UK and is currently the chairman of the board of HDB Financial Services Limited, a leading financial services firm and a subsidiary of HDFC Bank Limited. Apart from being associated with leading firms like AZB Partners, Deloitte India, he also has served as the board member and managing director of India's largest bank, State Bank of India, and as the managing director and CEO of SBI Life Insurance Company Limited. His main interests lie in the areas of leadership, organizational excellence, corporate governance and risk management, and organizational culture. And he's here to give us a global perspective that is indeed changing. Agents of Change. Please join me in welcoming Non-Executive Director, Prudential PLC, Mr. Arijit Basu. Welcome, sir.
Good afternoon to everyone. First of all, let me thank Nidhi and the Outlook Money team for having invited me over here. A real pleasure to be here, and congratulations, which I just came to know, on the fact that Outlook Money is completed 25 years. Truly a landmark event, and all the best to you. At the outset, I have to say two things. So I was very relaxed when I got the invitation, which was, I think, about a month back. And and then very kindly she sent me some pointers also, which I'll tell you what they were. And I was happily under this notion that, it will be like a panel discussion. And I'll be asked some questions, and you can always answer. You had the real masters answering you just 5 minutes back. And then suddenly a week back, I realized that that's not the case, and I'm required to speak. And in fact, it'll be intriguing if some of the people who know me from my school and college days, where I don't know, most of you probably were not that, but I was a backbencher and very happy at just somehow going through the class to be actually delivering what is being touted as a master class. So first of all, let me start with the notion. It's very, very humbling, and indeed, you feel very great that you've been dubbed as that. But at best, what I'll try to do is to make it as interactive as possible. I'll perhaps try to confine myself to about 15 to 20 minutes and then open myself to questions. And secondly, the task has been made even more difficult by having, the four of the largest companies here, the three largest private insurers and the three listed ones, were all represented by leaders who all of you know, and who have achieved a lot for themselves. And in fact, I was telling Mahesh before he stepped out that some of the things, if not all, had already been spoken and discussed. So what I'll do is, there were three areas which I also thought was very relevant for this overall topic of the summit, which is disruption and what is really disrupting things today. And the first one is what has been the main agents of change, which Nidhi also had pointed out to me. So, obviously, the first thought that comes to your mind is technology, and how is technology changing? I would put it a little differently. By now, if you are still thinking how is technology changing, there is something seriously wrong, and you are not going to survive in any industry, anywhere in the world. I would even go to say that. We are an emerging country still with a lot of poor people, but even in India, unless you bring digital technology at the core of your business, at the core of your thought process, you don't survive. So it's not a question, say, when I was in the industry in SBI Life from 2014 to 18, we probably still had that opportunity to consider at what level of technology adoption we were. And in fact, in SBI Life, we got that assessment done by an outside agency, and we had done a few things, but there were a lot more things to be done. And that will always be the case. That is the first point that I wish to make. That will always be the case with any good institution in the financial sector or otherwise, be it a bank. The bank whom we thought 2 years back is the leading bank and brought about all innovations in digital, etc., is after 2 years suddenly with changes which have come about, found wanting. We've heard of AI, ML, but when ChatGPT took over, and I don't know how many of you have actually used it, I just did it very briefly. At least on surface, it's very impressive. There was, of course, one very nice article which I read on that, which analyzed something which ChatGPT had brought out, and said that basically this was the question. This was more academic, and the answer that ChatGPT gave was neither here nor there. So, which is how you would expect AI. But the potential of what AI and ML can do is a given. And India, I think the second point that we all discuss is that India has really, really evolved, and in spite of not being the strongest economy in terms of per capita GDP, what we have achieved in the digital and technology ecospace, and which moves into insurance, is immense, which is a fact. And you heard the CEOs responding. Life insurance is more difficult. The last question which Nidhi had asked the panel, if you were present at that time, was about, how much can life insurance distributors add to it? I will just add one more point, that as Kannan rightly put it, it's a very, very long-term, 40 years, 30 years, and even today, there is a need to understand the product and service. So, if you were to ask, everyone talks about customer orientation, how is the customer thinking about the concern or the firm and about the product. But if you were to really ask and survey the customer as to what is the experience, and I'm talking of all companies, I may have moved on from insurance, but very much own the processes and systems which have been built up in SBI Life or any of the others, and the experiences. So is it still a seamless process right from the stage where you are interacting with the client to the point where the claim is being made out? I have received so many requests from people across the country that, this has gone wrong. I didn't want to buy this product. This is what the agent told me and this is what has happened. And wherever it was possible, we would then try to see whom we know in the industry or that company and try to. So the point that I'm making is technology has been adopted by everyone. In general insurance, as they pointed out, it's easier to adopt. However, even in life insurance, the adoption has been there. Analytics for digital is being used. The ones who do it smarter are better off. But at the same time, the scope for improvement is immense. I know that this meet is being sponsored by a technology company and there would be many techs here. So some heartwarming news for you. The innovation that can still be done on various aspects using what is available in India, India Stack, the account aggregator, NBFC system, the Sahamati driven, where you can use data from multiple sources who log into the Sahamati system. That potential, I think, is hardly untapped in the insurance industry, whether it is life or general. Two other sobering thoughts on, what have been the major agents of change. One is, when we speak of digital, I am also proud that in India we have built up the ecosystem. Very interestingly, I will not name the newspaper because I am in a newspaper or print summit. I read yesterday an article which was basically on the e-rupee in one of the leading economic dailies. And it was a very well-analyzed article. I'm not getting into e-rupee, but it had two sets of data points, which is relating to the adoption of digital. We are very proud about digital payments. Everyone does a UPI. I sat here. There was a vegetable vendor who delivered something to our house. My wife sent me a message, and I made a Google Pay in just 20 seconds. Yes, it is very impressive. But what is equally humbling is the stage at which we actually are. If you can, I would recommend that you see some of those tables which were given out. This table is on adoption of digital payment in the country. And this is 2022 data. I looked at the source also, just to be sure that this is not so this is a World Bank source, which the newspaper had quoted. So in Russia, the adoption is closer to 90%, with the variation between the poor, because they have also seen how much adoption is done by the poorest 40%, right? So the poorest 40% had only adopted about 5% less. So almost the entire ecosystem in Russia, more than 85% of the people adopt digital. China is just behind, 72, 75%. The other country, which India is often compared to, two other countries, part of BRICS. Indonesia was not covered there, but Brazil was in terms of digital adoption. Brazil was somewhere at between 55 to 60%. And India, we were between 20 to 30%, with even the 40%, the poorest population, having a 10% gap over the average. That is the average in India if it is 32%. So we are still, even after doing so much, having 800 million mobile phones, this and that, of which we are rightly proud, there is still a long way to go. And I am making this point simply because, in this country, in many of these debates that are happening or discussions that are happening, we are somehow, in certain cases, I feel, trying to say that, because there is a global context also which Nidhi wanted me to cover, in that context, that India has already done everything that needs to be done. That is not the case. Another data point that I saw in that, which I thought I'd share, was about simple thing, adoption of ATM debit card and adoption of mobile internet, doing transactions through mobile and internet. Again, they have given some developed countries, I'm not going. China was somewhere at 80, 90%. Here, adoption of Brazil, say for example, adoption of debit card ATM, payments made through debit credit cards is 57%, mobile internet is 37%, And in India, India and Nigeria were around the same, where it was 5% of the population use debit card and credit card, and 1% of the population only uses mobile or internet. Yes, the number of transactions is now in billion and etc. It will grow. But the point is that I'm not looking at something which is, we need to be critical, but it should be viewed as an opportunity. One more example from the insurance industry itself. We used to track. So the largest player, as of now, I don't know whether someone has come from LIC, but the fact is that we know that LIC was a different kind of company, and post-listing, it is in the process of converting itself, becoming a profitable player, and profit in the way the insurance industry understands it, value of new business margin, etc., which is very important. But even today, and in terms of in retail premium basis in the life sector, I think they are below 50% now. They were at 65, 46, 47% of individual premiums come from, goes to LIC. But if you see the number of policies, they are still way, way ahead. This is the only company which sells, I don't know how much, 2 crores or 3 crores policies every year, even today. Their growth may have got muted because of their size or whatever be the reason. And if you look at all the private players, 23 private players which are there, a similar thing is not there in, I think I'm a little too close possibly. Yeah. A similar thing has not happened in general insurance, where I think the private players have actually managed to run the the government-owned this thing. But in terms of outreach in the life insurance sector, LIC still is predominant. Possibly the next largest could be SBI Life, which is selling somewhere around 20 lakh policies, even after what their CEO was saying about 7 lakh being pure digital and being sold like that. So again, a very, very sobering thought, because it's not about insurance coverage. If you look at it, if you add the LIC policies which are in force, say 30, 32 crore, and if you were to multiply it by a factor of 4, you arrive at a figure of 1.2 billion, 1.3 billion, which is roughly the size of India's population. So one way to look at it is virtually we've covered all households, somebody has insurance. But then, again, in my previous panel, they pointed out that it is only 10 to 12% of the actual need of the country. And this issue somehow has not got resolved over the last 20 years. So the regulator, as everyone was saying, and we also are aware, the regulator has been extremely proactive over the last 1 year, and it's really creditable about the changes that have already been brought in. And with what is lined up in the insurance amendment bill, whenever it goes through, possibly in the monsoon session, as per the latest information, it's going to open up a lot of opportunities. However, this particular aspect of coverage, if we were to talk of the top metros or the tier 2 cities, tier 3 cities, yes, we have achieved a lot and we continue to achieve a lot. But in terms of outreach, sale of insurance, how to sell it, and this question of savings, protection, I will add one more thing, So when you are going and connecting to someone in a small village, and if you were to go and tell him that, if you were to buy a pure protection, and even I asked that question when I joined service some 40 years ago, some friendly neighborhood agent of LIC came in, only LIC was there at that time. He told me that, this is a policy, you pay only this much premium, you will get that much return. And for me, it was a big amount, so a few thousand rupees, but big amount. So then I asked him that, this is after how many years? So he said 20 years, you have to pay for 20 years, you get it. So I said, what happens after this? He says, you get nothing. So, but I thought that you got some bonus and return. He says, no, that happens. I was absolutely a novice. So he said, no, you get all that if you buy a savings product. So next day he came forward with another savings product, which I promptly also gave. So there is an element apart from, this argument, and I have seen not as drastic for Outlook Money, but this feeling that, what the life insurance industry should sell is only protection. And then, you do your savings from either equity or mutual fund. You have to look at convenience. Even today, with fair amount of financial literacy, I would say, having worked in bank and insurance and all that, I know many others like me who don't want to do all that and are very happy having a product. Apart from the argument that was put out by the panel, are very happy having a product which combines the benefits of savings and protection. Yes, the protection benefit could have been more if you had possibly segregated, but the amount of inconvenience. So how many protection policies I will buy, how many times I'll make investment in the stock market. So that is one part of it. That was one thing. So what have been the main agents of change? Obviously, it is technology. It is the way technology is used. And in life insurance, much more than general insurance, one other point that I would like to add is that how you are able to equip your internal workforce as well as the distribution workforce in making life simple for them. So first and foremost, you cannot make life simple for your client or the customer if the resources or the equipment that you have with you is a very cumbersome process. So nowadays, I think most of the leading companies, if he or she, the agent, were to go to a client, he could go with an iPad, laptop, explain everything over there. Because the customer, expecting the customer herself to be savvy and to understand and do digital, etc., is not necessarily going to work. So, but how effectively have we been able to convince our own agents that they are having a better and more seamless experience? And this is not true only of India. With the limited experience that I have gained in the last 6-8 months, seeing the global scenario, this challenge of making life easier for the distributors and agents is a universal global problem. And there is a huge scope for improvement. So again, when we talk of fintech collaboration and partnership, this is something which, innovation has to, in a collaborative environment, innovation has to happen on both sides. The insurance company can think of something, but the other thought has to come from the distributor, from the fintechs as well. Then what are the other developments in the global scenario which could impact India, in some thoughts around that? So one is 9 or 10 years back, when I had come into the insurance industry, at least for life insurance, the biggest problem in the developed world, which has somehow suddenly changed because of various economic development, was the fact that giving a return was a terrible task. For us, that was never the problem because interest rates continued to remain high, and if interest rates remained at a reasonable level, you are able to maneuver around those interest rates to give a reasonable return to your client, whichever be your product category, whether it is a ULIP, whether it is a traditional non-participating. For them, it was a huge challenge. Most of the countries in the West, if they had a 0.05% increase in interest rate, some countries like Japan even had 0%. And some had negative interest rates. You put money in a bank for a fairly long period after the crisis. You put money in a bank, you are not assured whether you will get your principal back. You might keep something as charges. That has reversed. The reversal has not happened necessarily because of benign conditions, but as you are aware, they are now fighting inflation because of all these global developments like the war in Ukraine and the impact of COVID, etc. And however, the scenario has changed a little bit for them. So the prospects of growth is muted. The growth in population still continues to be very subdued in the overall market. And as you know, in insurance, that is very important, the overall, what is the nature of the population. But the other difference is, in the developed world, the kind of sophistication in the products that you can make, the kind of products you can sell. We talked about wealth in the previous panel discussion. So health and wealth remains at the core of insurance, right? Health, COVID made it, opened our eyes to the need to some extent pull and push that continual debate that we have whether life insurance is a push product or a pull product. To some extent, it has become a pull product, at least among the lower middle class in some parts of the country. All that is fine, but at the end of the day, the wealth part of the offer that life insurance or general insurance or anyone can make in an emerging country like India, we have a long way to go in sophistication on that. And that is something which is, again, I look at it as an opportunity which may come to us in the next few years. There are one or two other things that I wanted to just touch upon before I open it up for discussion. That is, when we are, how do we innovate? I'll just take an example with this. So when we innovate, you can set up, so I think everyone in this room is aware of what are the latest technological developments, AI, ML, natural language processing, whether blockchain is relevant, whether the debate on whether we should go to cloud or whether we should remain in-prem. What are these? I have not spoken of cybersecurity if I had not touched upon it. That is something which I think the entire tech fraternity, all banks, all insurance companies, if there is one thing which is keeping people awake at night, even I think is the fact that, are we strong enough? And you will see the best companies being subjected to that kind of problem. But having said that, what kind of innovation is relevant? Sometimes, and how much of it can come from the company itself, and how much of it should be driven by, we are talking of keeping the customer at the center. So sometimes I have had this feeling, and it was just not in the bank or in insurance, that many of the, and this is not just the Indian experience that I've had, but a similar thing overseas. The feeling is that this is what we understood was the customer requirement, and this is what the latest technology can do, and you go for it without looking at what could be the likely outcome. And I'll take a positive example to end. So this was an innovation which I was suddenly told that we had in our company, SBI Life, that this is a process related issue, that we were having a lot of persistency was not improving. It's very good, they said, now closer to 90% for the leading companies. Even after 5 years, it is 60%. But at that time, all companies were struggling, and SBI Life a little more, especially in the agency channel. So there was a lot of element of how much the company itself is doing. So I was then informed and very curious that we are setting up a traffic light system, So what is this traffic light system? The traffic light system was red, green, and amber. I'm sure in some form it still exists in the company, and most other companies would have taken it up. So that the effort, typically you will find that you are bombarded by SMSs. Half the time, even today, you will find that you are ineligible. So at 60 plus, for example, I am ineligible for a product. I still get a SMS or an email from SBI or some other bank saying that, please buy. When you go to the site, I said that maybe they have relaxed. When I go to the site, you are ineligible because you are more than 60. Similarly, for follow-up in claims realization or in the bank in collections, what will happen is you will get a whole lot of things where it is not relevant for you. And sometimes you will always pay. you have an ECS, right? And that ECS has never defaulted for the last 5 years. What is the need of sending that? So this green, amber, and green, amber, and red system, they differentiated the customers, right? Or the clients themselves. So the green ones are likely to pay in any case, almost 95% with minimal follow-up. Perhaps they might forget because the date has slipped them. So one aspect. Red are whatever you do, the reds are likely to not, pay up. Not pay up unless there is a whole lot of effort which goes into it because you have ultimately some kind of a legal contract with them. The interesting bit is the yellow in the center, which is effort elastic. Because all the experts would know that after all, these are individuals who have entered into contracts. And he has multiple things to do. He has to pay his rent, he has to pay his electricity bill. If he were to come under any kind of difficulty, if the salary is delayed or there is some compensation which he was expecting which hasn't come in, insurance is not likely to be among the top, right? He would make sure that he is safe in his house, he pays the rent, he pays his electricity bill, water bill, etc. And insurance or any bank, he will try to delay as much as possible. Where timely persuasion and say repeatedly this yellow group is targeted. And then I was curious, it was fairly good. We had an uptake. It's always difficult to distinguish how much of uptake happened because we had that system or how much happened because everyone was more focused. But the fact is that is an example of a very positive example of whatever innovation you are doing, you are having the final outcome, whether it's a customer-related outcome or a company-related outcome in mind. And it is something which you feel is relevant. Innovation for the sake of saying that, we have done AI/ML, abhi to mera AI/ML se bahut data aata hai. And whole lot of things you get a lot of information which is then not used. And then it has the potential of getting misused because of cyber attacks. So that is something which I would reckon we should guard against and take it forward. Otherwise, before finishing, I just go to say that all the negatives that I have pointed out for a country like India, as I said, we are at 5%, even Brazil is at 40%, is not because I take it as a negative, but I take it as an opportunity. We should be very clear that we have not reached the end of the world. Whatever people may tell us, that is somehow seems to be the flavor of the day in certain quarters in India. But if we don't look at it, if we look at all the good things, but know how humbling it is to learn that we are still got a long way to go, I think that will be something which will take us to the next level. Real pleasure being here. I tried to say a few things which perhaps the others may not have said, so it was tough. Once again, thank you very much. Any questions, if we have time, I'd be willing to take.
Thank you very much, sir. We have exactly 40 seconds, so we can take one really quick question.
There are two issues which, I feel very disturbed about the insurance industry. You said that LIC has so many policies multiplied by 4, so everybody is insured. So one, the quantum of insurance is highly underinsured. Number two, the insurance agent, somehow his commission structure is made in such a manner that he never talks about protection. He talks about savings cum protection. So that's something which the industry should address, and I don't know how technology can address that. And third thing, you said persistency ratios have improved a lot. Yeah, they have improved to 80% in the 13th month. But go to 60th month. I find from the analyst presentation which they gave out, it is stagnant at that same 60%. So after so many years, 5 years of payment, somebody is ready to let it go. So that red light should be there in everybody's insurance company's war room. Thank you very much.
No, I cannot but disagree with you on any of the points. I think on the first part of your question, I had touched upon most of them, that I had a slightly different take on the protection versus savings. Agent incentive, the companies have increased their protection coverage for the simple reason that they are now giving more incentives for protection. Having said that, we heard all the leading CEOs speak about why a protection cum savings product is equally relevant, and I added my two-penny bit by saying convenience. So I'm giving my own example. I would be loath to, keep on taking, when I had this thing of buying a protection and then, calculating how much I get from protection, what is then that money that I save by not buying a protection cum savings product, that extra thing I invest in a mutual fund, I find it very cumbersome. So it's a fact that people find it convenient. And I was curious about what the global thing is. If it had been a one-sided story completely, then even globally, where people have enough financial literacy, there would have been no demand for savings products at all. But there is. And maybe the innovations that the industry can make is around adding a health, which is and many of them were doing it. Many companies, including SBI Life, had launched a health product where you give riders. And, riders is something where there is, I think, still a lot of restrictions in the Indian system. Because of this kind of restrictive attitude which IDDI had so far, which is likely to change. And many of the other value-added services, I think someone mentioned that it's possible post the insurance amendment bill that insurance companies will be able to do things other than pure insurance. It may be well known that insurance industry is for some reason completely forbidden. Relevant areas you can't even properly liaise with fintechs. So that is one part of the answer. But broadly, yes, I agree. And that is what I also wanted to highlight by saying that the sky is the limit in terms of the opportunity. Yes, we have developed an ecosystem. But again, if you look at it from the agent's point of view, because that was your question, it's a very, very tough job for him. He is there ultimately to make a living out of insurance. In fact, one of the chairmen of IRDA felt that agents should be given mandatory monthly income and all, which industry was not very comfortable with at one point in time. But he has to make sure that, he is able to blend into the ecosystem in such a manner, and he's given all the assistance that he has for it.
Thank you very much, sir. Can we have a huge round of applause for Mr. Basu? Thank you so much for joining us and for so humbly giving us your wisdom and your perspective. We're going to move on from one insightful conversation to another. And since we've been talking so much about technology, I think it's only fitting that I now invite on stage an accomplished leader in technology and the insurance space who's here to talk to us about Web 3.0 and the metaverse, broadening boundaries. Please join me in welcoming Managing Director and Insurance Lead at Accenture, Ms. Shubhra Goyal is here with us.
All right. Hi, good afternoon, everyone. My name is Shubhra, and I'm a Managing Director with Accenture Strategy India. It's an honor to be able to share some thoughts on this new, exciting, and still rapidly evolving world of Web3 and metaverse today. Many of the emerging technologies, right? There is a lot of hype. I'm sure you guys have also heard about Web3 and metaverse. And there are as many definitions as there are experts. So I thought maybe that could be a good starting point for us today in terms of what is Web3, what is metaverse. So maybe we'll start with that. All right. So some of you may already be familiar with the construct. So Web 1 to Web 3 is used to describe the evolution of internet as we know it today. For today's discussion, for ease of our understanding, we thought we could think about this evolution across 4 different dimensions. So you would see interaction at the top, infrastructure, data ownership, and medium. How has the internet evolved? We'll look across these 4 dimensions and try to understand how the evolution has been. Right? We'll start with Web 1, and some of you who belong to my generation might remember the time of the desktop era, where we had very static web pages. The development was done on HTML, Java. The user interaction was very limited, right? So there were maybe some links that you could click on, and that's about it. That is what internet was. Web 2.0 is where we are today. So the technological advancements made it very much possible for dynamic web pages. So there was now user-generated content. There were new ways in which users could interact with each other. So therefore, that led to a read or write versus the only read internet, where we started. This itself led to an explosion of social media, which is what we have today. Obviously, little did we know that social media is going to completely take over our lives. So that's sort of the perils of technology as well. We are now able to, the users are not just generating content, but we are able to engage with each other in a much different and a much meaningful manner. Web 3 is the next or the new stage of evolution of the internet architecture. The vision for Web 3 is based on 3 core concepts: decentralization, ownership, and greater user utility. Now, again, think of a world where you don't need permission from anybody to post content, where you own, so the users retain ownership control. So as against today, while everybody is generating the content, but the data is very much owned by the creators of the website, right? Because there is control, there is going to be possibilities of virtual economies, something like the Second Life that some of us might already be aware of, right? So that's the future. That's what Web 3 is evolving to be. That's what we are looking forward to. But maybe it is easier for some of us to think about what this technological advancement has meant for all of us as users, right? So 1900s was when the web started, right? We talked about Microsoft launched the Windows 95, Amazon and Yahoo came into being, there was Internet Explorer. For the first time, there was, because of Java, there was animation on website, and that was the new exciting world. Then, there was vast amount of information that was available for people to access anywhere, anytime, and that was a huge change from what we all were used to, right? So the 90s, internet was all about cataloging the vast amount of information that is available and making them available to people anywhere across the globe. 2000s was where internet-based businesses became commonplace. They were a part of finally everyday life, and that was brought upon by the rise of Wi-Fi. This was the era of smartphones, of video calls. This allowed people to connect with each other across vast differences. And this is what brought in, like I mentioned, the digital social life for the first time. So in 2000s, that's when we connected people. And hence you see Internet of People. That's what the 2000s were about. 2010. So we've now reached a place where AI algorithms have started to come into the play. There is enough data. So now think of this as the era of personalized or targeted advertisements. There is contextualized searches which have come into play. There is now real-time directions that we as users are able to get. As data is becoming more and more prolific, there is AI advancements continue. And this is when our physical products become smarter. Think about, this is what we call the Internet of Things. Think about Fitbit. Think about Google Homes. That's what we are now getting used to on an everyday basis, right? 2020s, that's where we are today. The last 2 or 3 years, there are 2 new Internet ofs that are coming into the play now. So the first one is the Internet of Place. And this is something, the idea which has been accelerated a lot by the pandemic, right? So this is the idea that we can go to places which are entirely virtual, right? And obviously the obvious idea being that during pandemic, all of us were confined to our homes, and you just needed a break from that. So, right? So a place that you could go to virtually. The second is the Internet of Ownership. And for the first time, you could own something that was a digital asset, which is sometimes on a colloquial language, what we called a token. A token is a digital thing, right? It is something that is auditable, that is traceable. There is certainty on who owns it and what is the history of the ownership. And that is what we think is going to be revolutionary. And here is where I want to draw the distinction between Web3 and Metaverse. So this Web3 is what is enabling the Metaverse on the form and function of how Metaverse, which was just a term which was coined in a science fiction book some 30 years back, but for the first time, we are able to sort of understand or see how the form and function of this Metaverse could look like. Right? How could that be real? Right? But finally, what is Metaverse? Right? I've been talking about Metaverse so much, but what is Metaverse? So, like I said, the number of people, the number of experts, and that many number of definitions. But it is something that is being done, or that is something which is present continuous. So it is still being defined. Within Accenture, we define Metaverse as an evolution of the internet that enables us to move beyond browsing to participating in or inhabiting in a persistent shared experience that spans the spectrum of the real world to a fully virtual world and everything that is in between. The creation of the Metaverse itself is going to be enabled by the convergence of many, many new technologies. That is where we talk about the user being able to move beyond browsing. So, right, we talked about earlier we could only read, then we moved to write, and now we are saying that we are going to be able to participate in this or even inhabit this space. And this is very different from the way we experience technology today, right? So this is going to be fundamentally different going forward in the future. In this version, as computing becomes more pervasive, we will become part of other people's experiences. And these experiences are going to be persistent, they are going to be shared, they will span a spectrum of real world and fully virtual world and everything that is in between. Right? Some of these new technologies we experience in our everyday lives as well, right? So when we go and shop on a IKEA or any of these e-commerce sites, they allow you today to, if you're trying to buy, for example, a chair, and to see how is this going to be in your physical environment, right? So some of that is where you are already mixing the real world with the virtual world. And Metaverse is going to be much more than that. New technologies like extended reality, distributed ledgers, tokens, digital twin, digital assets, that is what is going to shape the future of Metaverse. So what does Metaverse have to offer? So not going to drain this slide, I think too many numbers on this slide, but I just wanted to put out what potentially Metaverse has to offer. There is real value that could be created. We believe that this is going to come from the growth of the creator economy. This is going to be through the new and unique experiences that the brands will be able to create to engage new customers that they have not worked with or engaged with before, or even to re-engage old customers that they may have lost over time. It is going to be driven by companies who can create better digital experiences, because a lot of the digital assets have become very impersonal. So people already feel that I'm talking to a robo, etc. So how can that be made better? There are going to be new forms of value that could be driven by digital ownership, which was not possible till now. And there is going to be new ways of socializing at scales which have never been done before. There is real money economies which are forming around servicing of the digital avatars. I don't know, some of you potentially or some of your kids may already be experiencing that today. And it's not just in the gaming world. BMW is building, they're designing, building, and running factories in Metaverse. At Accenture, we welcome a lot of our new joiners globally on Metaverse every year. And there isn't a week where we don't see a new report talking about what is the potential of this new world. So there is a lot that we see. In the interest of time, we're just going to skip through this one. I think I talked about some of the examples on the last slide. So gaming, obvious one, I talked about BMW. Some of the others that we have seen already coming up are travel, fashion, learning, healthcare. There's one that I am particularly really looking forward to, which is a more immersive gaming experience in the area of exercising. I'm really hoping that it'll encourage me to do some exercise finally. But aside, so like I said, it is a new and exciting world, but it comes with its own fair share of risks because there are a lot of new technologies which are at play here. So right from, and I'm sure some of these will be familiar to all of us, financial fraud, IP theft, hacking, to loss of privacy, to even physical and mental harm that could happen. And that is where potentially comes in the role of insurance or risk management. Now, I want to think about it across 3 dimensions or a framework, if we can think of it like that. So how can metaverse be used for insurance? So what are the ways in which metaverse could support the insurance sector, whether it is for the top line or the bottom line? Insurance in metaverse. So what are the ways in which insurance could be used within metaverse? Are there any new kind of protections, coverages, etc. that we could use? And the third was insurance for metaverse. So just going to explore a little bit more on these. Diving ahead, let's start with the first one. How can metaverse be used for insurance? Across different businesses, we are seeing metaverse being used across the entire value chain, whether it is for enhancing the customer or the employee experience, making it more immersive, whether it was for creating new products, so understanding the needs a little bit better, to supply chain transformations. For in the area of insurance, we have already seen successful experiments, POCs, and in some cases, full rollouts being conducted across different areas. Some of the ones that I wanted to call out were on the areas of risk inspection. So there are instances where companies have successfully experimented with site inspections being done without stepping foot on the property with technologies like LiDAR, etc., which are able to map the entire property. There are also extensions of training claim handlers to handle commercial losses, especially for some rare events which could be potentially dangerous or rare, etc., to replicate for training. Right? Another area where companies like State Farm have successfully experimented and rolled out fully are in the auto claims process. So in the areas of subrogation, where companies are paying to each other, they actually did an experiment and then they found the experiment to be successful and they've rolled out the process fully, where they're saying instead of the old age physical payments and bookkeeping that was happening, they've now moved into fully digital payments on blockchain, which has led to a more convenient and a faster process. This is, according to them, just a small step in the many use cases that they are experimenting with. Another interesting use case is the blockchain for creating the electronic health record and giving the power to the consumers to be able to share their information whenever they want it, wherever they want it, at a place of their choosing. The use cases are still evolving, but we do see potential use cases across various facets of insurance business. It could be for enhancing the employee experiences, the customer experiences, or providing more immersive digital experiences, especially in the areas of servicing, where we have seen historically the customers do want to feel a little bit more supported, where they need a little bit more hand-holding. But on the other side, insurance companies also have to be wary of the costs that are getting. So that's where we believe a more connected or a virtual connection may work really well. Another area is, so while there are many, just calling out another one on this, which has potential, is on the gaming and simulation. So a side conversation that I was having with one of my colleagues was about how do we look at or how do we gauge customer behavior or the risks associated with it. And typically, the way we do it is by taking some past data, or there's some questionnaire that we will administer, and we expect the customer to fill some answers. And that is what we use to gauge along with the past data. But we were just wondering that it is one thing to answer something on a questionnaire where the answer is sometimes I just answer on what I think might be the right answer, or I answer on what I think I might behave. But if you actually put the customer in a situation, in a gaming environment, then maybe they're going to behave differently. And that potentially might give us some clues on actually the right, what is the real customer behavior. And of course, I'm not taking away the fact that there is a huge difference between a perceived loss in a gaming scenario versus a real world. But we just thought that that is an area, for example, that might be worth looking at. So I personally think really interesting ways in which use cases could still be explored. So that brings me to the next area on what, how can insurance be there in metaverse? What are the products that could be sort of looked at, right? So we already talked about the new emerging technologies that are enabling this whole metaverse continuum. But all of this and some of these themselves are really new, they're still evolving. That itself leads to a huge protection gap, and hence a potential entry point for insurance companies, right? So some of the examples that we've put out on the slide are insurance for digital assets. Now they could be, again, so some of those that we covered in the earlier slide could be across digital currencies, etc. So the risks were against, there could be exchange hacks, there could be cyber attacks, there could be ransomware, there could be loss or theft of investments. I'm sure we've read about the NFTs, etc., that have already been in the news. So there is a need for protection of or insurance of digital assets. Now, virtual real estate is a hot topic. The virtual real estate is real. There's a significant amount of investment that is going into that, and therefore a need for protection, for hacking, from cyber squatting, etc. The third one is on events and entertainment coverage in metaverse. I'm not sure if anybody in the room has attended an event on metaverse, right? But I'm hoping some of you have heard about some of the events that were done. So I read that there was an event that Travis Scott had done, which had 45 million plus views. Okay, this is the extent that metaverse is reaching out to the audience today. And I think we've always, long back when I started insurance, for any business you say, go where the people are. That's where the people are, right? That's where the new generation is, right? So the number of events and the scale of the events is only increasing, and that will require coverage. And finally, the last but not the least is the IP coverage. Now, metaverse poses a high risk of theft, infringement, and copyright issues from the real world to the metaverse. So hence leading to a possibility of a real financial loss, but equally an opportunity for extending those coverages onto the metaverse. Just moving on to the last one in this. So as we've already talked about, metaverse has the potential to grow. Businesses are already looking at where all metaverse could be embedded as a part of their business. As businesses grow, the platforms and the technologies which are supporting the rise of this metaverse continuum, the value of that will rise. And as that rises, there is going to be a protection gap and therefore a need for insurance to provide that infrastructure coverage. And that's where we believe that insurance can play a significant role as well. I think one of the last things that I wanted to talk about, but I think probably the most important. So while we've talked about the technology changes, etc., that are giving to the rise of this metaverse continuum, there is going to be a huge number of real-world regulatory or legal directions that will still have to be evolved. We've listed out a few on this slide. So you would see in terms of data privacy, right? So data privacy, copyright, some of the obvious ones that are going to be there. But just think about it. All the laws or the rules or the regulations that have been written are thinking about the real world, because that is where we lived in, and that's what we thought about today. So this is just a few that we've put out on the slide, but personally, I believe a lot of our existing laws, rules, and regulations will have to be re-examined in the light of this virtual or 3D world that we are now talking about. I think we've reached the end of my slideware for today. But I think some of the conversations when I have with some of the clients, they are talking about, so what should be our metaverse strategy? And personally, I think that is not the right question. Maybe the right question to ask is, how can we use or leverage or embed metaverse in the everyday life? So we are not thinking today about what is our mobile strategy. We are thinking about how do we embed all of that into our everyday businesses, whether it is for finding, so whether it is for prospecting, whether it is for onboarding, whether it is for own employee experiences, whether it is for development of new products. I think the idea is not what is the metaverse strategy. The idea should be, where can I use metaverse? How can I think about it, and where can I embed it in my everyday business? So I think that's all that I had for today. Thank you for your patient listening. And I hope there was some learning that you got out of this. And I hope you have a good rest of the day.
Welcome back to the third edition of Outlook Money Insurance Summit. Well, this is what we usually call the graveyard shift in live events. However, don't worry, even if you've eaten really well, I will make sure you're sitting at the edge of the seat, because this next conversation that we're going to witness is the edge of the seat. But there are a couple of our guests who are still outside, and I want them to know that things have gotten started here. So could you please help me out by putting your hands together in a big round of applause as a cue that we are getting started. There you go. Welcome to the next segment. And it's time to reconvene the session with a panel discussion on reinventing experiences. Today we are very, very privileged to have with us some esteemed guests who are leaders in health and non-life insurance industry, who are here to share their insights, and they're here to tell us about reinventing experiences and also creating newer opportunities. First up, let's invite our moderator for this panel, Outlook Money editor, Nidhi Sinha. Let's give her a big round of applause. Welcome, Nidhi. And now I'd like to invite our esteemed panelists. Firstly, we have Mr. Bhargav Das Gupta, Managing Director and CEO, ICICI Lombard General Insurance Company Limited, who has been associated with the ICICI Group since 1992, has held key leadership positions in diverse business areas. Secondly, we also have with us Mr. Mayank Batwal, Managing Director and CEO, Aditya Birla Health Insurance, who has a rich experience of over 24 years in the industry and has worked closely in various units and projects of the Aditya Birla Group. I'd also like to invite on stage Mr. Ritesh Kumar, Managing Director and CEO, HDFC Ergo General Insurance. Mr. Kumar is presently leading a diverse group of young, talented professionals and building a formidable institution serving India for over 20 years. That's our second bar panel for today. Let's give them a big round of applause. I can't hear you. Yes, thank you very much. And Nidhi, over to you.
I welcome my panelists for taking out their valuable time to attend the Outlook Money Insurance Summit. And as we all know, the general insurance industry has already been successful in reinventing a lot of experiences for the customers. We have seen many innovations pre and post-COVID, and which have kind of smoothened processes and even enhanced experiences to a large extent. All that, of course, is a step in the right direction, but I think things like chatbot, online onboarding, things like that are something that are a thing of the past already, and there are new touch points that people are looking for, because customers are constantly asking for much more. They are more aware, more savvy than ever before. So in this scenario, we hope we can find about these very relevant issues in today's discussion. And starting off, we should first find out what is already there in the general insurance industry. So Bhargav, I would like to start with you. Can you list some of the top innovations that have kind of transformed the experiences of customers until now?
Thanks, Nidhi. Thanks for having us here, and thanks for the question. Customer experience innovation very close to our heart at ICICI Lombard. If you look at the last 20 years, you touched upon some of the points. But if I look at the last maybe 4-5 years, a lot of the changes have been largely driven by the digital transformation, the data revolution, and the scope that sensors give us in terms of providing better experience to customers. And if I look at, let's say, the 3 key sectors that we if I look at our business and non-life, the 3 key sectors, let me give you one example each. So if you look at motor insurance, and as we keep saying, our what we're really selling is a experience. A moment of truth is in the claim side, right? I mean, and I'm focusing on the claims experience. One of the biggest change that has happened today is that at the time of claim, the entire process that customers used to experience earlier has got massively transformed. And while we've done it, quite a few other companies have done the same thing around, let's say, virtual claim survey. So if you have an accident, you don't have to wait to have someone come pick up the vehicle, go to a garage, and wait for that journey. You can start the process on your app. And once you do a survey, the entire process then can be taken control by the insurance company, and it's a seamless experience for you. So what we have is today, as we speak in ICICI Lombard, almost close to 80% of our motor claims are done through the virtual survey process. In certain cities, we have a claims buddy who will then come in and manage the entire claims experience for you thereafter. Just as an example, in the motor side. On the health side, almost 70% of our authorization for initiating a claim is done through a AI ML engine. So earlier, what processes that used to take more than an hour now gets done in about 90 seconds. Second example. On the commercial line side, I think the entire focus has been, for us at least, that how do we change the narrative for insurance from being just a partner for policy and risk transfer, which is you give me a premium, I pay a claim if there's a claim. How do we change the narrative from that to being a partner in risk management and risk mitigation? And that has been made possible through, let's say, sensors, IoT devices, a lot of work that we do on claims analytics. So if you have a refrigerated cargo, we will monitor the cargo, and if the temperature goes beyond a certain threshold, there will be an action. If the cargo is getting hijacked, we know that it's gone off route, and all of this is very easily doable right now. And we will then come in and help you recover your cargo, so that it's a win-win for customers, right? At the end of the day, a claim is expensive for us. It's also expensive for a good customer. So these are some of the examples of what is happening on the claim side largely. I specifically picked up the claims examples in these 3 key areas. Again, all driven by data, analytics, the digital technology that we have today, and the sensors that are coming through.
Thank you for that, Bhargav. Coming to Mayank, post-COVID, there has been an increase in health insurance demand. People have got more aware of how important it is to have health insurance. So, how have you kind of dealt with this increased demand, and what is the way forward on it?
Yeah, again, thank you for inviting me to the session. You're right. During COVID, the whole need of health insurance and the awareness around it and the realization for that definitely increased because of what people were seeing across, that something like that, a health event like that could happen to any and everyone, which did see a big spurt during the COVID time. I think the opportunity and the need for us is to kind of see how we leverage this at least heightened awareness in the minds of consumers to kind of continue to see this product as a relevant product, because there is an obvious need. There is also now, post-COVID, what we are seeing is that, because that level of threat has come down, people are now again postponing the actual decisions. Though the need and the awareness is felt, so if you talk to consumers, they'll say, yes, health insurance is important. We did a recent survey around health, and consumers were definitely talking about it. But because now many of the priorities which actually got into the background during COVID, it has come back again. So people want to go out, spend money on travel and holidays and buy a new car.
But do you
etc.
think any customizations can kind of?
Yeah, so that's what I'm coming to. So the question is, how do we come back and use this opportunity? I think there are 2 or 3 areas where the opportunities are. One is on product side, and I think, for example, now recently IRDA has allowed us to, as entities, to file the product and start using it, and that gives us an opportunity to try out products much faster than what it used to be earlier. There's an opportunity to try out a smaller period, smaller ticket size offerings on digital platforms for consumers to kind of test the product. If they find it good, they can, for example, one of the things that happened during COVID was this whole short tenure COVID product. Now, issue is not about the COVID product itself. The issue is about the concept of short tenure, specific risk, coverage product. I think that's another opportunity which all of us are trying to, do for, other health conditions or specific risks that for a period, etc., are happening. For example, on Ola, we do, short tenure, health insurance which started during the COVID period. That next 15 days, your any risk event is covered. It's a short tenure. People experience. Many of them are now wanting to buy. Similarly, I think there's an opportunity to look at what role can insurance products do, because there's another trigger that happened during COVID, which is the heightened awareness around health. And therefore, people are now saying that health is important. They definitely want to do something more urgently than, let's say, a decision to buy a few other things. So, how can health insurance companies, where the whole alignment of interest is complete, we want the consumer to stay healthy, the consumer wants to stay healthy, can we use this as an opportunity to kind of do a much more meaningful engagement with consumers than just the engagement around paying claims? Of course, claims is important, but there's a lot more happening in the life of consumer than just a claim event. So I think new kind of products are now becoming more important for consumers, where you, for example, provide better access to health and wellness, and digital platforms can be used. Regulations allow you to incentivize consumers for good health. So I think these are opportunities through the product route and ongoing engagement after that to make the product more relevant. Because I think there are 2 main issues why consumers don't buy. One is they don't find the product relevant, which is what we spoke about, and the second thing is how to improve the experience, which earlier Bhargav spoke about, claims experience in particular. I think a combination of these will definitely start making that impact. And the third thing, if we do, which is a whole industry-wide awareness campaign, which we started, me and Ritesh had spent a lot of time on that earlier, and we are now a lot more hopeful that we can bring that back again. I think we will keep moving ahead, is my view.
Right, so Bhargav and Mayank, both of you have talked about innovations and customizations that have come into the picture. So Ritesh, the next question is to you. Of course, a lot of customizations are happening, but do you think is it kind of translating into an increased uptake of policies, so to say? How effective are these measures?
See, thank you for inviting me. Always a pleasure to be on such panels. See, there will always be a lead time. There will always be a lead time between something getting initiated and translating into sort of either higher penetration or higher uptake. So I have very, very little doubt in my mind that a lot of these things which are happening will eventually sort of lead. In some cases, we are already seeing some sort of early wins. It's sort of in the others, this is something which would happen. The fact of the matter remains that today, I mean, what is being spoken of is that there are essentially 3 pillars which even the regulator sort of has been laying stress on. And which ultimately sort of leads into a higher penetration. So there is this overall thing that by 2047, how do we have insurance for all? So 2047, as we all know, we will be celebrating 100 years of independence, and how do we sort of take this journey from now, from our 75th year to the 100th year, in terms of getting insurance for all? And the 3 core pillars which are being spoken of is, the first one is awareness, that how do we increase awareness, whether it is above the line advertising, below the line sort of kind of things. But how do we essentially, how are we able to go to the smallest of, denomination, i.e. whether it is the village, tehsil, thereafter, and increase that whole awareness around sort of insurance. The second is the entire thing around accessibility. So it's, how do we, and there are a host of things which have been done, for instance, on the corporate agency. A bank today or a corporate agent is allowed to work with more insurance companies. There could be a lot of things happening on from how agents can be appointed and most of these things, which is there. There are new categories of intermediaries which are coming in. How do we use the digital platforms in terms of providing the last mile connectivity? Because that is what the younger generation, and let's not forget that about 2 crore individuals or youngsters come into the insurance buying age every year. Like we were discussing in the in the break before, they think very, very different from at least say people in my generation too, and that's something which will change. The third one, so I spoke of awareness, I spoke of accessibility. The third pillar is the affordability part, wherein what is being spoken of is that how do you sort of ensure that more and more people are able to have access to healthcare, are able to afford this, and there are a number of things which are at work. First and foremost, there is an element which as an industry we today lose to fraud. If we are able to sort of correct that, I don't think fraud can be eliminated, but it can be minimized. If we are able to minimize it, things can be repriced, and to that extent, for that the KYC which has happened, which has been introduced effective Jan 1st is a big step in this direction. There are a number of initiatives which the industry is taking along with IAB, on the whole platform called Bima Satark, sort of for doing this. There are initiatives which as an industry, we are jointly discussing in terms of how do we really sort of facilitate the end customer in terms of taking cashless up to as close to 100% as is possible. How do we, Mayank spoke in terms of, wallet products. How do we create products in smaller denominations? For me, what the mutual fund industry has seen is the classical example, wherein the moment the SIPs were introduced, you actually saw a very, very significant increase in the number of customers who were or in the number of people who were getting into mutual funds. Now, for me, it's an average Indian person who buys the health insurance, say, has a take home of 30, 35, 40,000 rupees. The month in which he or she has to pay for the insurance premium, and an amount of 10,000 or 12,000 or 15,000 goes from his pocket, the budget for that month gets impacted. If the same premium was to come in 1,000 rupee per month, it will become far easier. Okay, so these are the three sort of core pillars on which the regulator is sort of along with the industry, along with the councils across life, non-life we are working.
Right, you did speak about awareness, but affordability I think is also very closely related to awareness. Because people will end up buying, say, a car insurance, but they might not buy home insurance, though it is perhaps hugely more affordable. So those kind of things, when we talk about innovations, customizations, how do we kind of strike a balance between all these aspects?
See, there are, when a particular product is not purchased, you would have one of the factors or, a bit of each of these factors which are at play. So you're absolutely right. For a home insurance, it's the cheapest sort of product. But there the issue is about awareness, or the issue is about the fact that it will not happen to me, because the frequency may be low. On the other hand, there are things which are on the extreme other side, which are essentially sort of driven by the law that you need to have something. Or as a consequence of COVID, people saw that having health insurance was something which was a necessity. Not only having health insurance, but having adequate health insurance was becoming a necessity. So it is there. But as an industry, we need to work on all these pillars, because what is the reason why an individual is not buying will vary from an individual to individual.
Right, right. So, moving ahead, Bhargav, like we've talked about what is there right now in the general insurance industry with new emerging technologies, which is our theme for the event. What do you think is the way forward? What are the other possibilities that we can expect ahead?
I talked about the claim side. I'll not spend time on the claim side, but picking up some of the thoughts that Mayank and Ritesh had, both in terms of product as also in terms of, let's say, how do we make it more affordable? On the affordability side, I think one of the biggest opportunity area for the insurance industry is fraud mitigation. Today, if you look at the banking industry, till the credit bureau emerged, retail lending itself didn't get promoted as much as, it wasn't achieving its true potential.
Right.
There is a similar moment we believe is happening in insurance, and while the insurance industry has had this body called IIB where all the information of the insurance industry was going, I don't think we were leveraging that data as well. And there, the new technologies in terms of, again, analytics, etc., data analytics is not a very new technology, but at least we are beginning to use it, and we are already beginning to see some positive benefit. Ritesh talked about Bima Satar. To me, I think that is a massive opportunity for the industry in preventing some of the leakages that we are seeing. Number one. Coming to the product side, again, Mayank talked about the fact that customers are not just looking at being hospitalized, they're really looking at their overall, wellness and, what we can call a continuum of care. How do I stay healthy? If I feel unwell, can I talk to a doctor rather than rushing to a hospital? Because, I may be getting a, chest pain, it could be acidity. But if I go to a hospital, they'll use a barrage of tests and probably put me in ICU, and unnecessarily the bill will go up. It's not heart, it's just acidity. A small pill would have sufficed. And as a customer, I don't have any intention of landing up in a hospital. And no genuine customer wants to be in a hospital. But if you look at the overall, approach of insurance, we are only paying for the hospitalization. Only if you are there in a hospital for 24 hours, we will pay the claim. Roughly between 60 to 65% of the overall healthcare spends for Indians is out of hospitals, right? The outpatient care, part, which is doctors, medicine, normal diagnostics, etc. As an insurance industry, we are not covering that. Why? Largely because of concern on frauds. Now, with the current, opportunities that digital technology offers you, you can actually build purely cashless, services which are, starting with teleconsultation, which is now really rapidly picking up post-COVID. Starting with teleconsultation, video consultation, online pharmacy, diagnostics, which is cashless, paperless. All of that is possible, and some of us have already launched those products. And what we are seeing as a company is that when you provide all of this on a platform which gives you great customer experience, like a mobile app, you are getting a lot more stickiness and lot more pickup in terms of some of these usage of some of these services. And when it's completely cashless in a network, then the opportunity of fraud comes down, because it's not as if it's a reimbursement bill. When there is a doctor in your network, he gives you a prescription and only those drugs are paid for, then you don't worry about frauds as much. So these are opportunities that are emerging, just as an example in the healthcare side. The other aspect is, if you look at customer experience, let's look at customer service. I think the opportunity in what we've seen in large language models, conversational AI, we are beginning to see a lot more, service that we can offer to customers for, do-it-yourself or DIY, using voice, NLP, integrating the voice with, natural language, programming, and giving automated solutions for which the customer experience is much better. So starting with, you call a call center, you'll get your response without having to wait for the telecaller or the call center agent to pick up, for policy downloads to renewals to filing of claims or any other information that you need. And it's and increasingly it will be very, very human. The experience will be like a human being. So these are opportunities that we are seeing on the technologies that we have already seen. I think the other area where we believe there's a massive scope for change is on the motor side. In the past, we've been providing very standard products, right? Standard wording, standard products, pricing for third party, standard. Only pricing may be fixed, but the language is, pricing is variable, but the language is fixed. That is now changing. With KYC, I can give you a product which is completely customized to your driving patterns. And all of us in the in the industry have launched some products which give you pricing based on either the number of kilometers that you drive, which I think most companies have done, or the way you drive, which is something that we have launched, which is based on your driving pattern. We can give you a better price. So if you are a more disciplined driver, you will get a better price, and vice versa. Logically, in the longer term, every motor policy should be like that.
So in a way, innovations will also help pricing to a large extent.
This will help pricing for the better customers, and which is great for a good customer and good for the industry as well.
Okay. So moving ahead, Mayank, we are talking about customizations and continuing the debate on technology and keeping in mind the changing demands. So we are talking about awareness, but the other part of awareness, I believe, is also the distribution community, because they are someone who are like the last mile who can. Of course, there are chatbots and there are online onboarding and all those processes, but still a lot of people depend on agents. So what kind of changes or innovative ways they can acquire to kind of convince or make the customer more aware? And especially when it comes to health insurance, the terms and conditions or the exclusions that we have, a lot of people still don't understand it. So if you could.
Yeah, I think it's a very important question, because the fact is that today, insurance and health insurance for sure is a highly intermediated business, right? And agents in particular form a very large part of the sales size in the industry, though I do feel that we should try and see how we can expand that, but that's another topic. But staying on the agents part, I think there are 2-3 issues that we need to address in the context of the agents sales process in India. One challenge is that a large part of the agency force is not full-time, they are part-time, and therefore the time that they're spending on understanding the category and therefore being able to have conversation with consumers is not necessarily the same quality that it will be if the same agent is full-time, and therefore his entire livelihood is actually on the income from these sales. So if the second challenge is that there is definitely not an inherent bias in consumers to go and start buying these products. So therefore there is an element of nudge, and sometimes that nudge is gets extended to what we call push, that you go and do that, right? So I think keeping these in mind, firstly, I think how do you make sure that the products themselves and some of the conversation that we've had earlier are more attractive, relevant for consumer, because that itself will open up the opportunity for the advisors much more than where he has to kind of really go and explain that multiple times. And I think times like COVID definitely help in case of health insurance, because the consumer is definitely more willing to have conversation. Now the question is how do you prepare the agent better? I think today technology again is helping in that process a lot. Let me give you a couple of examples. Awareness. With the fact that digital social media is today a very large platform for reaching out to your prospect base, most of us, and including us, now we actually enable our advisors to kind of do prospecting, which is a very personalized prospecting that advisors can do to their consumer audience that they typically would do, where they feel more comfortable reaching out to whatever the prospect base is with relevant content to and it can be segmented. So if it's a segment A, segment B, segment C, the language, the communication, the content, etc. can be that which is more relevant for that segment. Suppose they actually get an opportunity to have conversations with those consumers. You can actually equip these advisors and agents with actually content which are readily available. Earlier days, what they'll do, they'll carry these big fat books which will have premium tables, and they will have these large long brochures, etc. Today you can actually say, if this is the customer profile, this is the product, actually just before entering you can actually look at this small video on how you should position this product. even when you are actually in the, before sitting before the, prospect, and if you need help, dial this number. There's an expert desk there where actually that person can help you in the sales process. So I think these are some examples, and plus equipping them with information at their, today on a mobile phone, they can, earlier they fill up the form and all of that. Today on a mobile phone they can do everything on the go. They can get all information on the go, whether it's for selling, office servicing. So I think technology, data, information, you can actually tell them that if this is a customer profile, here is a likelihood, and this is a propensity of sales, and therefore you can actually equip them. And my experience is that there is a category of these advisors who are now adopting technology significantly more than what, let's say, 20 years back when I started in life insurance. It would be completely, paper-based and all of that. So I think there's a lot that can be done to equip your, field force and helping them.
Can I just add
yes,
to
of
this?
course.
And just, one of the other things that we've seen, and COVID has enabled this really. We spoke in terms of how things have moved to the digital side. Now, just imagine this situation, and I'm just trying to build upon something that Mayank said. Earlier, most of the trainings would be that a trainer will walk into a city. He will basically say that today the training is from 10 a.m. till 12 noon. Everybody comes into a place, whether it's an office, whatever is the place. But this agent actually has a call that he needs to do to a customer. He or she is not able to attend. And this was typically the case. And if the person was a part-timer, most of these trainings would be during the daytime. He or she needs to attend their regular office. It doesn't happen. We fast forward to 2023. Today, the trainings are happening in a hybrid mode or in a digital mode. One of the things that I've seen is that at the end of the day, a training is as good as the trainer. Now, I need to do trainings in hundreds of places. I first train the trainer, then the trainer goes out. Today, I can actually sort of have a ACE speaker, my ACE trainer, actually do a video module. And after that, the questions, the next level can be taken by somebody who may not be as aware as me, and then take it forward. People at leisure can, I'll tell you what we've done as a company. We've created a number of what we call 1-minute modules. I see typically training is confused with something which needs to be done over hours and stuff. We've got a number of 1-minute modules. This 1 minute is actually clarifying things on one issue. So I think the quality of training across the industry has moved to the next level as a consequence of this.
Okay, that's very heartening. But so we're talking about customizations, innovations, retraining of distributors, etc. But the industry is also moving towards standardization to some extent. There have been policies. The regulator is rooting for standardization of a lot of policies. So Ritesh, how do you think, do you think the two concepts clash with each other, or how can they go hand in hand? And please, others can also join in the answer.
No, I think the whole issue of standardization and customization or bespoke product, or by whatever nomenclature we want to say, these are things which can coexist. The way I look at it is that the standardization of a product is required at the entry level. And this is required because you need to keep the product simple, you need to keep the product affordable, and therefore at the entry level in each segment you say that this is the standardized prescription. Over and above that, people who are aware of the products are willing to spend more, sort of understand the risk. You then move into the bespoke. So to me, at the base level is the standard product, and over and above that is the bespoke product, and to my mind, to keep it short and simple, both of them can coexist and should coexist.
In another way, it's like, since we're talking health, I'm going to general physician for the basic stuff, and then I can go to whatever specialist, right? It doesn't mean that both cannot exist. And a lot of what, he said, actually standardization is about simplicity. So that, you said that many times the consumers don't understand what are included, what's not included. I think just to make it clear to what is available or not, you start with a simple thing, and then based on the level of awareness of the consumer, they can keep adding what they want.
Real issue is, I think completely agree with the point that both Mayank and Ritesh has made. I think there is, both can definitely coexist and should coexist. I think the larger issue is either the customer or the distributor has to, either the customer knows or the distributor provides that knowledge of the true risk needs of the customer. So if you are a customer who are at that level where you just need to get a very basic simple product, given your affordability or your risk map, whatever you call it, I think the simple product can be appropriate. And there, the scope of misunderstanding or mis-selling is relatively low. However, as you go up the curve, maybe your affordability curve or your risk pattern has changed, then you need more sophisticated products. Now that, as I said, the understanding has to be at least with the customer or with the distributor who's giving you the advice. And to build on the point that Mayank made, I think I think the big opportunity for the industry is to see how we can professionalize and upgrade the skills of the distribution. And that is definitely a task. And one of the reasons why our distribution is largely part-time, the agency distribution is largely part-time, is because while there is a perception that distributors make a lot of money, the average agent cannot sustain livelihood based on the income that he makes from insurance. And I'm making this point because I think there is a narrative generally, in our society that distributors should not make enough money. And if you charge relevant fees for your service, that is almost as if it's extortion. I think that narrative also has to change, because if you want professional distributors, you want professional agents, they have to earn a decent livelihood. Of course, there's a strata of very large agents who do that, but I'm talking about the large numbers of masses. And if you're talking about insurance for all and everyone reaching to the last mile, the distributor is providing valuable service, and we have to compensate them for that.
So ultimately, it's also about value for money when it comes to distribution. And Bhargav, we were talking about the whole customer behavior and how that can be a game changer in the industry. So between prevention and protection, how do you see it going ahead?
I think all of us talked about some examples, and I'll just put it all together. As I said, the first example that I gave with corporates, right? So corporates are significantly more aware and risk conscious, at least the good corporates. Every corporate, good corporate that we talk to is actually very willing to consider spending money to, bring in prevention, right? When we talk about this, risk management, risk mitigation solution, the current act doesn't allow us to charge, so we don't charge. It's part of a free service that we give to corporates. But they do value that service, and we see that in terms of their renewal rates with us. So, in a sense, they're valuing that service. When it comes to individuals, again, no genuine customer wants to have a claim. Let's understand. No, none of us want our car to have an accident. We don't want to fall down and break our, leg. We don't want to go to the hospital, right? So there, I think there's complete alignment of interest in insurance companies, because we don't also want our customers to, suffer any of those, because apart from the human angle, there is also a cost angle for us, right, in terms of claims. So there is clearly an alignment of interest, and there prevention is something that we jointly are very, keen for, both of us to focus on. And on the health side, there is a lot of work that we are seeing. Almost every company, most of the good health insurance companies are providing a lot of advice on wellness, preventive, by many means, whichever is feasible. But it's a journey. I think, at this point in time, in the past, we couldn't incentivize customers for that. That's also changing. And increasingly, as we incentivize customers for better healthy behavior, we will see that journey even, reaching its ultimate end state.
Right. So, coming to the end of this discussion in a way, the last question to all of you would be, from taking off from what Bhargav just said, is that how do you think these innovations, the AI, ML capabilities, how will they finally reinvent experiences for the customers, for the distributor community, and the general insurance ecosystem? So,
see, I think at the end of the day, data provides for better underwriting, better processes, better claims management. So, and more is the data. And we saw the president of the Actuarial Society there, so I need to be careful when I speak in front of him. But the fact remains that typically, if you don't have data, you end up pricing sort of for the variation, and therefore you tend to sort of keep those margins. So better pricing will eventually, or better data will lead into better sort of pricing or more optimal pricing for the customer, will lead to more targeted approaches. I mean, whether we spoke in terms of the standardization. This will lead to the other part. It will lead to much better claims experiences. If we are able to control frauds, it will lead to much faster claims settlements. I mean, Bhargav spoke in terms of some of those timelines which are there. I mean, it will. A very very simple. Another example is that today on say something like a break-in inspection. With data and with AI ML, we are what otherwise would take a day or a couple of days. Today happens in a matter of 5 minutes. That somebody can buy an insurance policy. So all of these will lead into better experiences, and to my mind, will lead to more transparency. At the end of the day, a lot of these confusions or a lot of these things in terms of insurance being a black box or some of this goes away if we are able to create the transparency and data. That, to my mind, is a very very logical step.
Right. Just to add to this, it also kind of lays some amount of responsibility on the customers, because it's about responsible driving behavior to keeping fit, things like that. So when we talk about reinventing experiences overall, what do you think about that?
You're right. I mean, let me just talking in the part of health insurance, right? You heard us, all of us, speak about this whole issue of what should be our basis of engagement with consumers. So if good health for the consumer is good for the consumer, then there is a responsibility on the consumer to do something about it, right? Now we can trigger that action by way of empowering with information, by creating better access, by incentivizing, etc. But ultimately the action is...
But does it also ease the industry?
Of course it helps. Let me give you an example, right? So in 2016, RDA came out with regulations that they said that you can incentivize consumers with good health behavior. We came out with a product which says that if you demonstrate good health behavior, and there too, the whole basis was know your health, improve your health, and get rewarded. And if something still happens, stay protected. Now it has to start with know your health. I mean, I can't, you have to do something to know your health. But for consumers, we in our case, even after issuing the policy, we are able to get about 35% of our retail customers to actually go for a health checkup at our cost. Now that means that they know their health. The moment they know their health, many of them have come back and said, hey, I didn't even know that I was at a risk of pre-diabetes. Or hey, I did not even know that actually I had a blood pressure problem. Now which means that they are doing something about it. So how does it work for us? Because of this data, today we are in a time of personalization, hyper-personalization, because of the digital world and the way they are experiencing their engagement with the other platforms. They want everything as me. Talk to me like for me. Don't give me about even segment and cohorts are no longer relevant. Me. So the moment I talk to customer A and say, Mayank, you have this risk, this is what you should do, the likelihood of their action increases significantly. And I think that is where data, which is the point that Ritesh was talking about, actually helps a lot, because I can talk to the consumer at n is equal to 1 level. Another example, quick one. In case of Bima Satak that we saw, right? One of the problem of, and this is removing negative experience. One of the problem with consumers is, especially in reimbursement claim, is that if there's a trigger for, let's say, fraud based, I do investigation, there are still false positives there. The more data we exchange with each other, you reduce the extent of false positive, increase the customer experience in terms of the positive. So I think this is the way we have to go. Data is the raw material. Then we have to the AI and ML engines and other emerging technology to make it better.
Right. Bhargav, your last word.
All I can say, I think it will transform every part of the journey for the customer and every part of the operations for the insurance company. Be it the onboarding journey, be it in terms of the service experience that we provide, be it in terms of underwriting, be it in terms of claims, and definitely in terms of fraud control. I think it will change the entire journey. I think the real opportunity for insurance, as the proposed act is providing scope, is to build a much deeper relationship with customers, going beyond insurance into the areas of preventive risk management, providing these value-added services, so that we are collectively, the insured and the insurer, collectively work for the betterment of the customer in those areas of risk, be it motor or health or commercial risks.
Thank you. And I would like to open the floor for any questions, any audience questions.
Yeah, my name is Amit Naik. I am the agent of New India Insurance. I just wanted to draw your attention to the less spoken and not maybe less spoken field, which is one of the line of businesses, liability insurance in the general insurance category. In 1984, we had a Bhopal cash tragedy, and 1991 Public Liability Act came into existence. Few months back, or I don't remember the date, there was a Morbi tragedy, and 135 people died cheaply without there was no fault of theirs, but it happened unfortunately. So my question, given all these circumstances, my question to you is that there are two things. One is the Industrial Public Liability Insurance Act and Non-Industrial Act. In the Industrial Act, there is a mandatorily one has to take the organizer has to take the chemical companies there or the pharma companies there. They have to take mandatorily public liability cover, the third party cover. But in non-industrial like malls or hospitals or hotels or at public places, it is not being mandatory. So do you think that given all these circumstances, can you make the representation to the Ministry of Finance and IRDA to make the Public Liability Act amended and Public Liability Insurance cover mandatory for all the at non-industrial places and industrial places?
I think that's a fantastic point, great point, and this is something the industry has taken up. This is a recommendation that the industry has already made. Where it gets done, that we can't comment on, but absolutely valid point that you're making. And there are similarly a lot of other areas. I mean, if you look at some of the global examples, in a lot of places, some of these basic, in a sense, third-party protection aspects of insurance, right? This is not about self-protection, that's your call, whether you want to protect yourself or not. But third-party protection are largely mandates, because otherwise people don't want to spend that little bit of money, and that's the right way to go.
Let's have a huge round of applause for our power panelists, who, while they were talking about reinventing experiences, were completely reinventing the way we think about our business. Thank you very much, gentlemen, for joining us here at the Outlook Money Insurance Summit. As we are thrilled to welcome our next speaker. His experience has spread across consulting, tech, investments, pensions, life insurance, and general insurance. He had earlier been elected and served as the Vice President and Honorary Secretary of the Institute of Actuaries of India, and was also involved in the committee's working group set up by the Insurance Regulatory and Development Authority of India. He's quite passionate about finance modeling, investments, and teaching, and involves himself in this area quite extensively. And he's here today to present on the issue of climate change, which I would say is a very, very timely topic. Please join me in welcoming on stage President of IAI. Okay, we're good to go. A. Rajaraman. Welcome, sir. Can I have a round of applause, everybody? Welcome, sir. Thank you so much for joining us.
A very good afternoon, everybody. Thank you so much, Outlook Money. It's an honor and privilege for me and also for our institute. On behalf of the Institute of Actuaries of India, I congratulate Outlook Money for 25 years, the Silver Jubilee, and I wish many more years, the Golden Jubilee and the Diamond Jubilee. Looking forward to it. It's a power-packed and insightful presentation, and that too after lunch, what an actuary can say, and that too about climate, isn't it? I'll try my level best to keep your curiosity intact. I just wanted to play a video, but unfortunately due to the formatting issue we could not. I hope all of you have gone through some of the reports on the climate. You might have, you might not have. But just let me start quickly on that. There's a green card. Right. As you are aware, there is an intergovernment panel on climate change, which is called IPCC, which meets quite often, and they have been meeting and publishing reports. And some of the details are from their reports, which I have brought in because it's quite relevant and makes sense in this context. We are talking about risk management, but that too in the context of climate change. The temperatures are rising in the world, but before that I just wanted to start with saying all forms of life on earth are vulnerable to climate change, isn't it? Including us. The uncertainty or changes in the climate have significantly impacted all the lives. How? We will go through that. First, the temperatures are rising significantly. If you look at 1900 to today, on an average, the temperatures have risen about 1.1 degrees Celsius. The oceans are becoming more and more acidic. The sea ice, sorry for the typo over there, it's a sea ice, it just made a sea size. The sea ice is melting, and because of that, the ocean levels are rising, and that's reducing the land size. Between today and the next 100 years, they are expecting the temperatures to rise further by around 3 degrees. Now, for a rise in 1 degree Celsius itself, we are having such a huge impact on most of our lives. And if it is going to be 3 degrees, it's going to significantly impact. And how do we manage it? It's going to be very difficult, not just for individuals, it's going to be difficult for businesses as well. The melting of sea ice has risen the ocean levels by about 10 centimeters in the last, say, about 100 years or so. But in the next 100 years, they are expecting this to increase by about 30 centimeters to 50 centimeters. That's quite a lot. So what is going to happen to the coastal population? This brings us to the impact that we are seeing on the human systems and elsewhere. There is a lot of food insecurity that is happening. The human health has taken a beating. The mortality and morbidity it has a significant impact on mortality and morbidity. There is a level of water scarcity that we are seeing. As you might have seen from your childhood how the water scarcity have come through. That's one of the primary reasons is the climate change and human activity. The reason for climate change has been due to the human activity. Now, if the temperatures are going to rise further, how it will impact the human life? Let's move. This is a bit detail about what we have seen in the last slide, how it is affecting the lives. It's not visible from the back, so I'm going to skip this slide. Let's come to risk now. So this is a huge risk for us. How do we manage the risk? If I look at risk, there are 3 types of risk. One is an avoidable risk, the other one is an unavoidable risk, and something which I will say, okay, I will carry with the risk. So if I look at that and see how I can transfer the risk due to climate into avoidable, unavoidable and residual, and do some adjustments or adapt myself to manage the risk, how that will help us. That is what is carried over in this slide. Now, while doing this, we may have to look at different systems. It could be a national system, it could be an international system, or it could even be a regional system. It could be a state level system, for example, in a simple context. It could be a government system at a national level, or it could be an international arrangement as well. We will go through that in a bit detail in a later slide. I'm going to skip this slide as well due to the size, but what this in essence says is that how we will manage risk. What are the steps in managing risk in terms of identification, in terms of getting to a solution in terms of measuring and quantifying the risk, and in terms of implementing the solution, how the whole lifestyle works in terms of starting from what are all the risks that we have, and what the risks that are avoidable, and what risks that we are going to do, take some kind of a model to change the risk, or adapt some ways to reduce the risk and quantify, and the life cycle continues. It depends on the choices we take, sometimes reducing the risk, sometimes it may increase the risk in some other fashion as well. So we will have to keep a check on that. But now the critical issue on the risk modeling. It's not about the risk itself, but how do we convert that risk in a quantifiable way, right? So when I say risk, then comes, okay, fine, it's a risk. So what next? We have a lot of issues in terms of modeling this particular climate change risk. It's unlike our other insurance risks. Other insurance risks are pretty straightforward. I have a past experience. Based on the past experience, I project future. I do some adjustments for how the underwriting has changed, how the lifestyles have changed, how the time have changed, how the patterns have changed, or where I am selling. All those things I can do. But in terms of climate change, it's not so, because it's very complex. Translating the climate risk into a quantifiable financial risk, it is starting just now. We haven't had enough experience, and there is a lot of system changes that are happening in terms of identifying what are the risk drivers which are driving the financial risk itself. There are gaps in data, there are gaps in risk classification, and there are gaps in how they measure the risk itself. For example, if they are measuring the rain, in one place they may be measuring physically, in one other place they may be measuring in a different format. So there are a lot of difference in terms of measuring, in terms of geography, in terms of timelines. It's evolving, at this point of time, and currently it is predominantly focused on credit risk, not the other sides of the risk which are associated with the climate change itself. If we move further, since this risk itself is so complex and evolving, and we do not have enough grips on that, it's suggested that we have a scenario modeling, in a sense that we look at different options together and then identify what would be the likely outcomes if this happens, if this happens, if this happens, and then create a strategy around it, and then go and implement the same in terms of reducing the risk and managing that. Why? Because it's all interconnected. A lot of the risks that we had mentioned in climate are interconnected, and also the data reliability is still evolving. It's not up to mark at this point of time, and hence it's suggested to go for a scenario approach. Okay, fine. So we talked about how the risks have come and how we can manage those risks. But where do I get the data to model this risk? If I have to convert the risk into an effective quantifiable way, we talked about an increase in the temperature of about 1 degree centigrade, or an increase in the sea levels by 20 centimeters or 50 centimeters in a period of 100 years. So what are the factors, or what are the drivers? If we could just look at heat, the wet and dry and the wind, there is sub-classification into it. These data points are available in various sources. It could be from the satellite images, it could be from the various data sources that are available open in the open setting, or it is from the IPCC itself. They do have a published data which they have used for their own reporting. Not just this, we have coastal, especially for India, the coastal, we have a coast on both the east and the west, and hence it's very important for us. I'll come to a slide on that. So these data can be procured from, so the first three items, the first three data sources are from the IPCC itself. They have used this data for their publication of this report. But before that, let me explain, these reports are quite voluminous. They have so many chapters. There are around 20 chapters and each chapter would have about 200 pages. So they have published quite a lot of material on each of these risks and how the risks have to be managed. And they have taken a lot of data in doing that analysis and coming out that report. And it's an intergovernmental panel, and that's been done on a regular basis. And hence, if you have time, please feel free to read at least the India context or wherever that is relevant. The other, the data sources from the fourth item onwards are open data source which are available for public. From an Indian context, we have ISRO as well, providing data from the satellite, for imaging purposes. So let me come back. Okay, fine. We talked about the climate change. We talked about the risk. We talked about the risk management. We talked about where the data is available and also the modeling issues that we saw. So what about next? How do we ensure that the risks are minimized, and how do we take it to the consumers at the end, right? So let me bring an example from Fiji. Fiji is a set of island in the Pacific. There are about 300 islands. Rainfall is highly variable there, and also wind is also quite significant. The duration and the intensity varies quite a lot. So what they have done is, they had this problem for quite a long time, and it's spread over different islands. So they have come up with this is with the support of UN. They have come up with the parametric insurance. It's an index-based insurance. I have only taken one example, but they have multiple structures over there. The cover will kick off if the wind speed is greater than 91 km per hour, and if the storm cover will kick off if the rain is greater than 150 millimeter in 3 consecutive days. The kickoff is for the claim payout. The premium is 100 per 1,000, but that's for Fiji, because the risk is over there. The risk is heavy. The frequency and the it's quite often happening over there, and hence it's about 1/10. The output or the claim payout is structured over here. There are two components. One is due to the rain, and one is due to the wind, right? So you get a payout based on a combination of that. This has helped the people who are in the coastal areas, for the island, it's almost everywhere is coastal, right? I thought, let me just use this for an Indian example. We'll come to that. Before that, for the insurers, if we have to, we talked about the pricing of this particular parametric as an insurance, micro insurance. As we know, the insurance bill is currently is getting revamped. Anytime it will be passed, maybe in the budget session or maybe in the monsoon session, and that will have a significant impact. It will take the insurance to the grassroots level, to the various districts. We expect the penetration to improve significantly. Insurance for all by 2047 is the goal by IRDA, and that actually includes this micro insurance as well to a large extent. But however, we have some risks or issues for insurers. What happens is, as the climate change happens, there would be changes which happen in the climate risk itself. Today, if we kind of categorize this risk in a way, but it is evolving, and hence it will change. Some type of risk may become less affordable, if because of climate. If some liability risks are significant, then it may become less affordable. There could be some markets which will altogether diminish itself. It won't exist, or it may become so small that nobody may write business over there. The accumulation of risk might happen. The population may migrate from one place to another, and hence there would be a changes in population, and hence the insurance market itself might change. The mortality and morbidity may change because of that. The lifestyles, the age, and how long a person would live, or a health situation might change, which would further complicate matters. Apart from that, we also have the model risk, as what we said. We kind of formulate a methodology, and if that methodology doesn't work out, we have the model risk. There could be claims which would come later, latent claims, especially in a liability setup, which may come a bit later. So there are still a bit of issues for insurers that we will have to take into account, but this is an evolving field, and I'm sure as we progress with more and more experience, this will settle down. At this point of time, we're just starting over there, and hence, it looks a bit as an issue, but as we move forward, this will settle down, right? So this is a recent news article that all of you might have seen, right? 9 Indian states among top 50 regions facing climate change. This is a global study, and they are saying that there are 9 Indian states. The states have also been mentioned. I think it's Uttar Pradesh, Bihar, Tamil Nadu, Maharashtra, and many of the states which are very important from an economic perspective, from a population perspective, and from an overall country perspective. And some of them are coastal in nature. So I thought, let me just conclude with a quick India experience. As I said, the last point, we already have weather-based insurance. Some of the government schemes which already we have, which have been promoted by the Prime Minister's office, on the agriculture, on some other areas as well. However, if we have to spread further, and taking account of the previous slide that some of the states are going to get severely impacted due to the climate change, and if I look at the coastal states, there are at least 6, 7 in the total, if I'm not wrong. So we will have to look at how do we cover the coastal population in terms of their loss of livelihood, in terms of their loss of health, their life itself will change significantly if there is a significant increase in the temperature, and because of that the ocean life might change, and hence their opportunity to earn would change. They may have to come to something else. The floods and rains may have an impact on the agricultural laborers and agricultural fraternity. So how do we do this now? So maybe we could think about like a parametric insurance. A simplified model combined with a reach of microfinance institution would definitely help. Some states have already started thinking about this. I don't want to name, but they have started exploring parametric, but they have also started thinking about how to do a bit of prepayment. See, we pay the claim post the event, right? So I mean, it's like an indemnification right now. If it is received slightly earlier, it may help to even avoid that risk to some extent. Do prepare it in a full-time basis. So they are looking at doing it in advance. Like a health insurance. If you get money in advance, maybe you can have an operation, or maybe you can plan some health plan itself. So like that, if we have a advance payout, it will help minimize the risk. So that's what they are starting to think about. That's it from my side. I thank the climate change report. They have published, as I mentioned, about 2,000, 3,000 page report, but please feel free to check their videos. They have recently released a synthesized report for the entire for the last 6 reports. I have also taken information from our International Actuarial Association and the UK body. We keep evolving on this, we keep discussing this in our forums, and I thought it would be more appropriate to share with you on the climate risk, these topics. That's it from me.
Thank you so much. Thank you very much, sir. And now, ladies and gentlemen, as you can see, we're setting up the stage for our next fireside chat. For this conversation, we are being joined by a thought leader, someone who's been driving digital transformation, innovation, and industry leadership as the head of operations and customer service at the world's number 8 digital insurer. He's here to take us through his thoughts about innovations in India. Joining him in this conversation will be Kundan Kishore, Deputy Editor of Outlook Money, and we are so honored to have with us Mr. KV Deepu. Can we have a big round of applause? Welcome to the stage, gentlemen. And over to you.
Welcome, sir. Thank you. And congrats to the Outlook Group on having Outlook Money on having completed 25 years.
And thank you so much for your valuable time you have taken from your busy schedule.
Thank you.
So today we are going to discuss about innovation. innovation in financial sector. Of course, that is not new, but it has been accelerated in last few years, especially post-pandemic. So please help us understand what lies in the store for insurance investor or the person who is going to buy insurance.
Okay, thank you. See, when we look at innovations in financial services, we need to keep two things in mind. One is innovation is always for the customer. You innovate, so that the customer benefits. The other is when you look at financial services, there are 2-3 angles which come in. One is there is no patent in financial services, so you have to keep innovating. And the other is, trust lies at the heart of everything that you do in financial services, because, especially when it comes to your money, people are, extremely wary, and therefore, innovation has to, keep that in mind. Now, when you look at, the history of innovation in financial services, we've had various products and services and variations, catering to customers, all through. What happened during the pandemic was, as we all have been discussing threadbare, everybody was suddenly forced to move into a completely unparalleled way of working. And as they say, right, necessity is the mother of innovation. So suddenly people had to come up with solutions, right? And that's what led to, a spike in innovation. I'll just share, a few examples. Let's take, the lockdown which happened. People who were at home, physically also if you're unwell, you couldn't go to a doctor. And even if you went to a doctor, at that time, right, we seem to have forgotten that because today we are not wearing masks, right? But the entire healthcare system was geared up to prioritize, COVID-19 patients. So what would you do if you had a normal ailment, right? So for example, at that time, we came out with a very simple innovation called Doctor on Chat. So our customers could log into our mobile app, have a digital consultation with an empaneled set of doctors, and they could do a video chat, they could have a voice discussion, they could do a text-based discussion. And once they get, a digital prescription, they are just go and buy medicines, right? Simple, yet effective. One more innovation which I can talk about, which we did, and this was prior to the pandemic. I'm deliberately introducing, the pre-pandemic phase because we shouldn't think that all innovations happen only during the pandemic. Is most of you would have motor insurance. So when you buy car insurance, there's a product in insurance called telematics. So what happens in telematics is you have a device kept in the car, and now the car is connected. So you get a feed, you get information on, how good a driver you are, and based on the conversation, you can have an informed discussion with the insurer 1 year later. Now this is something which, a few players offered, and we said, how do we innovate and make it different? Especially in the Indian context where the person who's driving the car need not be the person who's insured, right? It could be your driver. So let's take an example of a working couple. Husband and wife are, in the morning the driver drops them to to office, and then he drops the kids to school. And then, in the afternoon he has to pick up the kids from school, while the parents are still working, and then drop them either, back to home or maybe to a daycare center. Now, being parents, we are worried about, children being picked up by a driver, right? Because you keep hearing a lot in the media. So, what did we do? We launched, using telematics, a feature called geofencing. So, what happens in geofencing is, when you have the normal product, if the driver takes the car on a different route, you would get an alert, that this car has been taken on a completely different route. Now, this was not possible without the use of technology. So, that's how, we were able to innovate before the pandemic. And I also gave an example of innovation, during the pandemic. And this is one story where there is no full stop, right? As I said, you need to keep innovating day in and day out, but it is always for the customer.
Of course, there has been a lot more innovations are there. But are there any specific areas where you feel that that requires more innovation?
Yeah. When you look at areas, I think, a key thing to keep in mind is the area which has maximum customer friction. Conceptually, if you look at those areas, that's typically, where you would find, innovation, right? And if you look at the range of, players which have involved, right? I mean, for example, let's take the ride-sharing app, right? It's because you usually found it very difficult to, go and book a taxi, right? You have to get out of the house, you have to hail somebody, who's passing by, negotiate, right? Sometimes you may refuse to go to the destination, so on and so forth. And that's how, innovation happened, right? Today it's, it's so easy to, go to the app and book it, right? And also the app enables you to even book it in some countries, which is not a native country, right? So that's how innovation has helped customers. So areas, where customer friction is high, are areas where you can typically verify innovation. So if you take that concept and apply it to, insurance, one area is claims, because that is the moment of truth. You buy insurance so that at the time that you are in trouble, how can you get, help from your insurer, right? So for example, one thing we had done in, motor insurance was that typically how would it work? If you crashed your car, you would call up the insurance company, they would call a surveyor who would come to the site, assess the extent of damage, and then the whole process would kick in. We came out with a simple two-step process. The customer had to click photographs, so the surveyor is not required up to certain amounts, and then just upload images using the mobile app. Our AI engine at the back end would assess the extent of damage and convey the amount to the customer. The moment he gives his consent, money is transferred, and this can happen in less than 20 minutes. So that's how we were able to innovate. So if you look at the whole spectrum, right, whether it's motor insurance, travel insurance, health insurance, the entire range of insurance. So claims is one area where you definitely can continue to innovate. That's one. Similarly, when the pandemic happened, overnight call centers were shut down. Right? Now do you service customers? And the pandemic may happen, but you have live customers, right? You have somebody who at least at the beginning, right, of course travel stopped, but could have been stuck at some other end of the planet, right, with a travel insurance, right? Maybe he's lost his baggage, maybe he's lost his passport, maybe he needs to get hospitalized, he needs your help. And similarly, health, right? Even during the lockdown, let's say if your car has crashed, you can continue to keep it in the garage and take it out later. But if you are unwell, you can't wait, right? So then, we came out with a series of innovations, in health insurance by which we could continue to give uninterrupted servicing. So, customer service again, right, is an area, where you can continuously, keep on innovating. So to give an example of, what we did and how it can help, what would most firms focus on? You would typically focus on having your addresses updated, because the moment somebody clicks on the website, you want to make sure that it doesn't reach the wrong place. What we did earlier was when a customer clicks on our address, right, we would have a bot pop-up and ask the customer, you clicked on this address, so we sense that you want to go to the branch. So the bot would ask him, can we help service you digitally so that we can eliminate the need for you to go to the branch? And for the customer, it's a wow, he didn't expect that. So that way you can pick a series of actions across the entire spectrum, big and small, and keep on innovating. And the third area in the Indian context is, because a lot of digital assets are in English, how can you make a difference to customers in their language? So bringing in multilingual capabilities across the entire value chain. So I'd say these are 2-3 areas which we can specifically focus on even going forward.
So in fact, as far as innovations are concerned, they are in product innovations, services. What about pricing?
Well, pricing is it's an evergreen subject, right? It can we can sit here and keep debating till the cows come home. But as far as pricing is concerned, one thing which people need to understand is, if you look at the insurance industry, right, there is a term called combined ratio. Combined ratio is a total expense, right? What you pay on claims, that's the biggest expense. Commission, it's a distribution-led business, and your total expense. The industry's combined ratio on average has been around 120, which means for every 100 rupees that we earn, we are spending 120 rupees, right? So clearly it shows, which way pricing needs to go, right? I think, despite, while players have made all of attempts to ensure that, it's a win-win for everyone, right? Yes. But just to give you an idea, right? The other is, if you look at products, the way they've evolved, right? You've had bite-sized products coming out, right? You've had sachet products, coming out. So when you look at all of that, right, the attempt, you can create to, where you can cater to the needs of various segments. So ultimately, you move from a one-size-fits-all approach, to a customized approach. So that way, it can be a win-win for the customer and the carrier, depending on which segment the customer is in and at what stage of the life cycle he or she is.
That's great. And as we are in the era of this artificial intelligence, metaverse, ML is there. So in that case, how do you see that all these things, this will help insurance industry to, take advantage of that?
Yeah. So the first thing we need to keep in mind is, when you hear buzzwords like, AI, ML or metaverse, it's important not to get caught up in this, in this euphoria of, just launching something for the sake of launching. It's very important to figure out, the right use case, right? So a conversation which says people are talking about blockchain, therefore let us do something in the area of blockchain is not going to work, right? You may come out with something which customers may not use. It's very important to focus on the customer first and the technology second. So what is it that you're trying to solve? There are two things you do. Either you solve a problem or you create a completely new experience. And then based on that, you are in the business, you know what your customers' needs are. Then based on that, you apply the right tool, right? It may sometimes be a very, very simple solution. Sometimes it may involve, very complex, state-of-the-art integration. Now coming specifically to AI, ML, metaverse, and the host of technologies that we read about. With the pandemic, right? Of course, the pandemic is today a cliche term, so I don't want to keep using it again and again. But the fact that at that time, globally, right, it was not just a country phenomenon and it was not a short phenomenon, right? For nearly 2-3 years, right? everybody grew up, lived through a completely different way of not just working but living. That's when, a host of these, technologies, came to the fore. So when contact centers were shut down, AI, through the form of chatbots, would basically come in and, service customers. So that's one. Similarly, I spoke about the claim process, right, where, if you didn't have a surveyor, the customers could click images, and then the AI engine at the back end would read the, image and then give, a faster response, a response to customers in as low as 20 minutes. So that's how, we were able to deploy AI. And this will continue, across the, entire, spectrum as we go through. Now, coming to metaverse, people have been dabbling with it, they've been trying to, find use cases. Sometimes, you will find, when you see a host of, new technologies coming in, some take off, very rapidly, and some take some, time to, scale up. And that's because, you have to first find the right use case. So if you can find the right use case, then you will find that, it's easy. In fact, the example we use is that of the ATM, right? If it's convenient, you'll go to the ATM, otherwise you'll go to the bank, right? The innovation has to be simple and effective. If that is the case, the technology does not matter.
But in that case, if we take an example of artificial intelligence, if insurance sector will use that artificial intelligence data, then don't you think that will help them to come out with a product, insurance product, customized product for the end user?
See, when it comes to customized products for the end user, what is very important is to look at data.
Right,
exactly. Data can, basically tell you, because you are able to measure, the customer experience in a much more granular manner, and therefore, come out with, meaningful products, right? So, when you look at, how, AI can help here, right? Because you typically apply AI in those areas where you want the bot or the tool, to give a human-like experience, right? Where, you need not deploy human beings. So from that perspective, AI will follow the outcomes that you are able to get once you understood your data, right? So my data tells me, for example, that these are areas of friction. Then in those areas of friction, I'll have to see from a use case perspective whether AI makes sense. Then if it makes sense, then I'll deploy, an AI-based tool, right? So, if you take, for example, the whole health insurance, landscape, right? I told you that we had to get into uninterrupted servicing even during the pandemic, right? Whether it is claims management, because somebody is unwell, right? He can't wait. Or whether it is, uninterrupted issuance of, health insurance policies. So we deployed, AI at the right, the right areas. So for example, if customers couldn't go to hospital for a checkup, right? We leverage something, an area called telemedicine. By which, we would do a digital examination of customers, of prospects, and then, continue to issue policies. So first you understand data, and then you apply, the AI in the right use case. And if the combination works very well, then you will have, rapid scaling up.
No, but in that case, of course, we collect data. But in that case, if we collect granular data, so in that case, we can come up with a specialized product, or maybe or the kind of end user. Like now we have seen that some of the insurance companies have launched their insurance plan that is user-based plan, right? So something like that. In that kind of innovation, is that possible?
See, when you look at products, you need to understand how the industry operates. If you go back to the 1600s, when the insurance industry first started, the biggest form of insurance was marine insurance, because at that time, everything used to get transported through ships.
Right.
Then you had the automobile revolution, and then after that, the whole focus shifted from, the sea to the land. Then, motor insurance, became the biggest form of insurance, right? And now as we go forward, right, if we get into a completely digital, way of interacting, then cyber insurance, could become the new frontier. So you need to pick the wave, which is ruling the roost. And then within that, right, you can have a range of products, depending on what the data tells you. So if you look at motor insurance, for example, geofencing, the feature I spoke about, right, it's clearly, based on data and application of Internet of Things, right? So that's how, you come out with innovations. So the deployment of products, it's based on understanding of customers, right? And within that, you can have, a series of products. So if you look at motor insurance, if you look at cyber insurance, if you look at health insurance, and you'll find a huge range of products today. All these products are obviously because firms have understood what customers' needs are, right? Based on data, based on actual customer feedback. So then you come out with either bite-sized products. There are some products, which cater to the entire spectrum. There are some products, which cater to, to a selected set of customers, right? And to the point that you made, sometimes today you also have modular products, where, customers can come and, pick and choose. They can curate their own features, right? And then, it can get launched. So today it's a very flexible world, right? You can have it both ways, right? On the one hand, you have firms curating products, and then you also have customers picking and choosing what they want.
So as you rightly mentioned that today we have demanding customers, especially millennials and Gen Z. They always want a tech savvy. So in that case, how do you think that technology can help or help all this need of this new age investor, new age policy buyers?
See, technology can help every spectrum of society. It's not only about Gen Z or millennial customers. So when you talk about technology, there are multiple uses of technology, right? One is the very form of interaction, right? Now, insurance continues to be a push business because you need to explain to customers, right? It's a conversational sale. So the selling was always human, but the interaction can be digital. Today, a lot of intermediaries, they need not collect paper or they need not come back to the office. They can basically use their own devices. They have an app or they have a tab, right? And they can use the device to basically issue policies. The second aspect is claim settlement, right? Yes. Again, claim settlement, can be, completely seamless, right? And since you asked about, millennials, right? I'll just give you one example, right? There is a startup and it's operational in three countries globally. It's not yet in India. So there it's very simple. Let's say today you're going to Goa. If you go to Goa on a holiday, what you take with you will be very different from, let's say, what you would take if you're going to the Himalayas, right? You don't have to buy a policy which covers both. You can just choose the items, go to the app and say insurance on for these items. Once you finish your trip, you come back and say insurance off. Next week you go to the Himalayas. Now you have a new set of items, you say insurance on. You come back and then you say insurance off. So that way, you are catering to these, to the youngsters, who basically want to have different forms of insurance depending on how they do. Similarly, when I said that it's just not just this segment, we launched, a mobile app exclusively in Indian languages only for farmers. And it turned out to be a massive hit. It had a good rating on the Google Play Store and it even won us a global award. And when the pandemic hit them, sitting in the comfort of their home using this app in the language of their choice, they could interact with us, with the government, with the ecosystem at large and get notifications. And it just became a lifeline for them. So you look at any segment of customers today, you can use technology. Similarly in the US, there's a startup. What they do is, let's say there's an old couple, they have a car, they don't use it on the weekdays. They take it out only on the weekends. Maybe they go to visit someone. So the insurance is active only for that period. So you can use technology to make it customizable for any segment of society. Of course, there is a tendency to focus on millennials, but we've seen that you can use it across the entire spectrum.
Okay. Great insight, sir.
You are at the Outlook Money Insurance Summit and we're moving into one of our final segments of today. A distinguished person who has excelled in technology and contributed to society is our next speaker, ladies and gentlemen, founder and CEO of Gratim IT Ventures, who's going to lead a workshop on leveraging tech today. Please join me in welcoming Mr. Prakash Vishwanathan.
Yeah, thank you for that standing ovation. I'm impressed. Last session for the day, so I'll make it as brief as possible. We can probably go home a little early today. Leveraging tech is an interesting topic. Just a quick look at where, just an introduction. We are, I represent this company called Gratim. We are provider of what's called as flexible and adaptive systems for the insurance companies. We make policy administration system very flexible, very adaptive, and it's not just the product configuration. You practically configure the entire insurance process, as we said. Work with many large insurers. We have 5 core insurance implementations in India, and we have roughly about 15 odd crores of policies that are currently being processed in the system. All throughout the day, we heard about people talking about how the industry has gone through the COVID phase. It's been very exciting to hear that. But at the same time, there is also much to be done in the future. So that's why I will probably touch upon this topic of how can we make things a little better and what we can do from what we are today. As we start, let's take a quick check on where we are today. As an industry, we have done extremely well. If you I mean, I hear stories about how bad the insurance industry is, even in some of the developed world. We are far too advanced, even when we compare it with the developed world. We are digitally very advanced. Digitalization has been embraced by the industry a lot. We have everybody talks about AI and analytics, how it's being used in claims, how it is being used in customer engagement, and so on and so forth, improving growth, increasing the business. We have moved from a branch office to a mobile office. I mean, today, if you look at it, there are at least 5 unicorns in India which are changing distribution in a major manner. So these are all great stuff that the industry has achieved. So I'm not going to get into there are not many things that one need to learn. We are already there. So it makes my task a little difficult, but let me just try and see how we can change things even a little better. So I'll start with what we call it as a transformation of the core itself. This doesn't have to be done in a hurry. This can be done step by step. But there are certain fundamental things which we need to keep in mind as we are looking at transforming the core. The first and foremost is that you have to get the core to do things faster. That's the most important thing today. When we talk about launching a product, it's not just about product configuration. It's about you get a product specification with you. Can I put this in the market in 3 days' time? IRDA has told you go ahead and now sell it, right? You don't have to wait for IRDA to give you a permission to do that. So if I get a specification from my business team or my product team, can I get it out in 3-5 days into the market? That's what we are talking about today in terms of speed. We have heard about IT architecture. It's a term that all of us use in the industry. We complicate it a lot. And many often when I go and see insurance companies, I notice that they say that I have 50 systems working, I have 70 systems working together for me. I think we need to change that narrative a little bit and say instead of 50 applications being there, why can't we have 50 services being there? If you try to make that transformation from a system to a service, that will ease a lot of the challenges that we have when it comes to managing core. AI and data, we all talked about it. Just keep in mind that all you need to do is take decisions. Is it helping me take my decision? That should be the fundamental item that you're talking about in terms of your core transformation. Of late, we face this challenge of security, and our CSOs, pardon me for saying that, but they keep frightening us, saying that, no, this is not secure. I need a lot of it to be done. Trust me, this is not as complicated as what it is made out to be. But fundamentally, as industry, we got to understand what is going to be my most secure asset that I need to do. Which part of my data is secure? Which part of the data that I can keep it open? If you can make that small transition, you can probably knock off maybe 10 to 15% of your rollout time for products. And lastly, 2 factors which we have always seen that my core is on a BPM layer. It doesn't work for certain journey sections. So we got to start looking at it and say, how do I manage that better? So have a little bit more flexibility on your API layer and have a little bit more flexibility on your BPM layer. It's actually pretty simple to do. It's not at all complicated. Let me just touch upon that. So what you have here is a diagram of a 3-level core. At the top, you have a customer-facing core, which we call it as journey as a service. So you put in all your customer journeys at the top layer, make it all your UI, UX, all of them at the top layer. The second layer is what we call all your processes, so be it new business to underwriting to claims to renewals, all of them coming in as a service. And the third layer is where you either use interfaces with your ecosystems, with your core system, with your legacy core system, with your financial systems, and so on and so forth. So making the BPM layer and other things a little bit more flexible. Today, all of them can be put in a system all of them can be administered by configurations, and this is what we call about as flexible core system. The second important aspect that we look about when we talk about technology changes today is an area which is pretty much ignored in today's world, which is how scalable is my system. Okay? We have all looked at scale by saying I will increase my memory, I will increase my IT infrastructure. Trust me, that's not the way it has to be done. You can do it much more better, much more efficiently if you automate your process. Don't look at your insurance the boundary of an insurance process is not one module. It actually runs across multiple modules. Okay? So if you look at that, can I link all these processes together and make it into one single longer boundary? That's one of the most important aspects. Cloud is important, modular platforms are important, data ubiquity is important, and this has a huge factor in reducing your cost of operations. We are seeing about 70% reduction in cost of operations if you do this scale aspect. We bring that scale aspect into the core, and you have both tangible and intangible benefits that come from that. Again, very simple to implement. Like I said, straight through your tasks, schedule tasks, single process from code to policy. Is that at all possible with our UPA, with our KYC interfaces and all that available? You don't need to spend much time in trying to get customer information, punch it in, do all that kind of stuff. So pretty much simple today in human world to kind of address it. Lastly, my last point for the day is something called a zero-based design. This is a new term that's emerging in the industry. Trust me, it's got nothing to do with environmental sciences or any of those things, environmental protection or any of those things. This is about trying to make a customer journey, having the customer at the center of it, having the customer speaking the language that the customer understands. Okay, this again is very, very, very simple to implement, very simple to understand. It's a relatively new concept. Even we haven't gone into depth of trying to figure out. We're doing some work on it, but we haven't implemented any of them yet. But it's a very interesting thought process if you maybe want to look at it. And I'm told that in some of the areas that where they have done it, they have got about increase in productivity of 30 to 50%. And about 10 to 20 point increase in customer satisfaction. So a huge impact. It's an area that we need to look at. Again, very simple to do. I don't know if the slides are not so clear, so you might not be able to read that much. But fundamentally, what we are talking about is trying to take away the rule and the process out of the system and keeping it away, so that you have a journey on one side and the rule and the process coming in later. Lastly, I will leave you with this slide, what a typical architecture should look like. I'll just explain that. Pointer here, but at the top of it, you have you have an ecosystem layer. At the bottom of it, you have all your interface layer. At the center of it is what your core applications or systems which is today it's mostly aligned to services. You built a rule engine which you can configure. You built analytics on top of it. You have all your documents and data and video and all of them coming into another stream. Interface it with your external systems and your core system. This is an ideal technology architecture. Many of the companies like IBM have adopted this. This is helping industry, kind of move from what we used to call it as legacy to a flexible system. Thank you. That's my 2 minutes today.
And as I was seated here listening to all the speakers, I'm going to take the opportunity to really summarize everything that we have spoken about. That the opportunity for all insurance players to grow is rife, and as we're reaching $200 billion by 2027, everything for India so far looks positive. I think one of the most central points to every conversation that happened on the stage was customer centricity when it comes to insurance. The new environment will also encourage new disruptors to enter the sector. As far as AI, ML, data analytics and IoT are concerned, they will be highly leveraged for a better digital experience. And all in all, a shifting industry landscape will help insurers overcome current performance challenges by changing where and how we generate value. With that, ladies and gentlemen, we come to the end, to the conclusion of the Outlook Money Insurance Summit, 3rd edition. Can we have one final round of applause for every single speaker, for all of our moderators, for all of our guests, and of course for all of the insurance industry leaders. Thank you so much for joining us here. Until we see you next time, take care and have a phenomenal evening. Thank you.